Check, 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 check. Hump day, yeah. Yo, what up? Check 1, 2. It is Shimano Trader. We are live, baby. Yeah. Happy Hump Day. All right, traders. What the hell is going on with you? How's the week treating you? Making any money yet? Making some of that moolah? Yo. All right, happy Holy Week. I'm Shimano Trader. Welcome to the spread. We are a live trading show Monday, Wednesdays, and Fridays. 9 a.m. to 6. What? Tripping. 6 a.m. to 9 a.m. Pacific time. Welcome to the show, guys. Yo, it's been a pretty wild week, man. I can't say it has not been. Actually, a very cool week. So let's get ready to trade today. Go over the news and get into it here. Hope you guys have been having a great week. It's been an interesting week. Shout outs to the first responders. That bridge in Baltimore that collapsed. Sucks to hear about that. But the market is kind of slow this week, guys. It is Holy Week. It's Good Friday. On Friday, the market will be closed. Do not forget that. And let's get into some of the trading going on today and some of the news for today. And let's get ready to trade, traders. All right, man. Let's get into it. All right, let's switch it up here. Do some. Hopefully not too slow here. So. My spot. Yeah, man. Sean really kicks butt. All right, traders. Let's get into it. What do we have? All right, let's set up our levels here for the SPY this morning. We are sitting on Apple calls for the week, so we'll see how that plays out. We did have a Boeing short that we've closed out yesterday. And then today we're going to see what we have in store. Let me keep this down a little bit. I think 30 is a good one for you guys. All right, man, let's get into it here. Let's see how this SPY is going to play out with us. It's a SPY here. Let's go on yesterday's high, which was right around here. It's kind of where our high is. That's the level. So we're approaching that level right now. That was yesterday's high. So we'll see how we react to that. It's a good level to keep in mind here. So, all right, so we'll leave that as our previous day high. That was our high right there. All right, and then our low. Big sell-off at the end of the day yesterday, right? Looking, everything's getting got bought right back up overnight. All right, so we're going to leave that right there. Pre-market highs, yeah, like right there too, right at that level. We've still got about 25 minutes, so I don't know if that's going to hang or not, but that's a good level there where things are meeting. All right, so pre-market low, so that'll set that up. Just sounds. All right, so we're gonna see how that plays out, and then Apple 170.74 currently. That sounds better to me. Sounds loud in my headphones. I don't know how it sounds on OBS though. Oh, there it is. All right. Okay, so we have our SPY level set up, so we're good to go on the SPY levels here. So we are ready for the SPY. We really should just track the SPY and do that here in the beginning. Check. Just want to make sure I'm not clipping out here. Oh, okay. I can hear myself better like this. All right, check 1 2. All right, there we go. All right, so we have our SPY levels set up for this morning. All right, so and then we are let me see, these volumes things are a little unaligned here. All right, so we are watching Apple. We are sitting on Apple calls. 172.50 is our target price. We got quite a ways to go, so we're gonna see how that plays out. And then we did play a couple of shares. We are sitting in some Reddit shorts for late April. We have some Pfizer open. GameStop we got clapped on last night. Just took a small position there on that. And then yeah, I'm just gonna watch the other plays here. Yeah, I like the way AMD looks too. We did buy some AMD yesterday. See, hopefully it recovers today. All right, let's get into the keys for the trading day, brought to you by Verified Investing. So the market blast keys to the trading day. The Federal Reserve President Christopher Waller speaks later today. Investors will look for cues on whether or not the Federal Reserve will cut 3 times. More and more analysts are saying 1 to maybe 0 rates. Wow, that's pretty wild, man. We went from trying to do 3 rate cuts in a year to now sounding like we may not do any rate cuts this year. That is wild. And then Hood debuts a credit card, triggering the stock to jump 7%. So look out for Hood. Hood is 7% today, pop on those news. And then Merck jumps 5% after the FDA approved its treatment for a rare lung cancer disease. And then GameStop drops 20% after disappointing earnings. They also announced job cuts. Late day sales in big name stocks last few days are likely a result of the rebalancing of the end of quarter. SMCI, Nvidia, and Meta, all 3 got sold off at the end yesterday. So that typical end of quarter kind of stuff. Apparently, when you talk to these guys, that's the kind of stuff that we're experiencing. Just a bunch of end of quarter rebalancing. So you're going to see a lot of that happening. A lot of sell-offs and things like that are happening in the market. So yeah, trade carefully, especially end of day. Maybe there's some good opportunities, on market close to go long or to go short. A little bit of a pop on GameStop, not by much though. All right, what are your plays this morning? What are you looking at? Yeah, these are kind of the same, huh? And Tesla looked like it's continuing to power higher. Now 181. That's crazy. Huge pop on Tesla. I think it was because of the increase of their they raised the prices on some of their models. That's what I heard. So, all right, we're all ready for the market open. Let's see what the market has for us today. The Russell dropped yesterday. What did Russell do yesterday? Oh yeah. What did I have? I don't think I did the Russell though. I did do a SPY. Let's see if I go back to the SPY here. Yeah. 526.68. No, 28, right? Oh, it's a real tight range for the week. Yeah. Maybe more downside than upside, huh? Yeah, look at that range for the week. It's so tight. It's only 547. And what's the option change today for SPY today?
By the way, everyone who's been getting calls on Medicare and something that they know about you, which is what I got a call on, that's the hack. The hack has been distributed, and it's something, the first time I've ever felt it. I got 5 calls in the last week of different Medicare providers who knew everything about me. And this hack, as Nikesh Arora told me from Palo Alto, maybe the worst.
Sorry, guys, just sipping my coffee.
They know everything about me. Everything.
Are you convinced or confident that regulators can be mindful and yet not restrictive on the innovation?
No, I'm not. But I do think that what tends to happen is like what happened with the first one of these, the Interstate Commerce Commission, if you go back to the 1800s, yes, where they say, okay, guys, here's the guidelines. You figure it out. And if anybody's going to figure out, then what will happen is Amazon will set the standard because they've thought more about this than anybody. So they have to get rid of the bad actors. And maybe the best way to do it is to self-regulate because they don't really know what to do. And what you'll do is you'll go to Andy Jassy and tell us what do you think is the right thing to do. But we need it. There have been some very bad hacks within the federal government in the last 4 weeks where they need to figure
talking
out
security.
who's building the actual learning part, which is that they can literally get into the learning part and convince these machines to come up with things that could hurt you. So that's very, very warranted. Good
Right.
report by her.
Well,
good report.
One thing that's increasingly clear is that the innovation's in the hands of a select few. This picture of Mark Zuckerberg
I know,
with
I've got it
Jensen
too.
Huang.
I've been trying to get a hold of him to go through this because this is my piece. When I got back, my first piece was you got to get it right with Jensen. And Jensen and Mark have a very, very good relationship, which isn't talked about. When I first talked to Jensen about Mark, it was, I would say, didn't really know, but they've gotten together, and I think Jensen, by the way, has been an incredibly positive force on Mark. Jensen is not a warrior. He always says he comes in peace, and really doesn't want to help you if you don't. He doesn't want to help you. So I think it's very good by Mark, and You got to get with Jensen. But what was scary about this, no leather jacket from Jensen, which
Yes.
made me think it might have been some sort of Adobe Photoshop.
Yes.
Where's the leather jacket? Hey, my wife says it's a Tom Ford jacket and costs a fortune. Don't get any
really?
ideas. Yeah.
Speaking of Adobe, we'll talk about the Adobe Summit this week. Nice call out Emilius today saying
Oh, yes, that's Ben Righteous again,
Yep.
doing a good job.
Adobe fights back. When we come back, what's ahead for Apple as well after what's been a rough quarter for the stock will be a big topic for Jim's Investing Club meeting at noon Eastern today. Futures do remain positive. Dow looks to open up almost 200. Squawk on the Street continues in a moment.
We're doing the top side here. I think we are doing the top side. All right. 172.28. I'm just doing some weekly charting here that I should have done on. I did do it on Sunday. I just didn't chart it. 176.61. Is that what it said? 176.61. I think this should be to the upside, right? Yeah, and then to the downside, real tight range this week on some of these stocks. You guys got to be careful out here. Just short week, a lot of low volume kind of stuff. 172.28 minus 4.333, so we get 167.94. 167.94 to the downside on Apple. So yeah, so we're like more towards the downside than anything else here on Apple. Probably time to switch over short, maybe. All right, 6:17 in the morning. We got about 14 minutes or so for the market to open. So we're just doing some charting on the actual charts. Should have done it on Sunday, but I was traveling, so I couldn't get around to it. Yeah, Apple don't look so good here. It's got too much to go in just the 2 trading days. Premium's gonna be clapped. All right, we did it on AMD. We did okay. Let's do it on Boeing now. Good morning. How you doing? All right, so let's see here. Tough part about being in business is getting paid, man. Boeing. So BA, we have 746. Oh, that's a pretty big range. Goes at 170.83. We're gonna plus 7.46 on it. We'll get 178.29. Oh my god, I'm tripping. Sorry guys, I tripped on that one.
Fiverr.
Apple announcing its annual Worldwide Developers Conference set to begin June 10. The watch will be on to see if the company unveils its AI strategy along with some new products. And as we get to the end of Q1, shares of Apple are down double digits year to date. Jim, we mentioned this JPM note today. Looking at the China sales, says it does raise some concerns.
No doubt about it. China's a very big market, and they did say it would be soft this quarter, but I think the cadence of the softness is very bad. March very bad. So I want everyone to be warned. Look, I still say own it, don't trade it, but obviously we want to see this quarter. For the developers conference, I think the attention is going to be for the Vision Pro, because that's where the writers are going to come. That's all new. I know that Jensen Huang wants very much, as NVIDIA, to be able to work closely on the business aspects of the Vision Pro, which has not been a focus at all of Apple. So I think that you have be down on the phones in China, and then up when we get to the developers conference. And the Vision Pro, because Vision Pro, frankly, if they're just going to make it into something that's worn on an airplane, that's not going to work. And so we really, really, really want to see big companies writing on the Vision Pro, and the number one to write will be NVIDIA.
It's pretty amazing when you, at the same time, are having to develop a new product category, handle the situation in China, Tim Cook this week, and then this journal piece about Phil Schiller basically looking at how they're going to defend the walled garden against regulators.
You know, look, I think that the long knives are out for them everywhere. I've gone over that Justice Department suit, which, you know, I think is fatuous because it's already a lot of things. They made a lot of mistakes. Merrick Garland made a lot of mistakes. He's our Attorney General of the United States, which is, you do not expect him to make mistakes. It was almost as if it was a rush job and a pastiche of things that really don't amount to anything serious by blocking up a super app, which they're not even doing, and making it so that if you
all right, guys, we're listening to CNBC right now as we're charting our morning charts here. So
It's a green bubble.
you guys have any questions or anything, reach out to your boy.
When Apple complained, go tell your mother to switch to Apple. There's a cavalier notion that
Spies pumping
I don't see
above
being the
pre-market
case at all.
here.
I think that they're very humble, but the government wants them. Everybody wants them. Boy, that makes me laugh.
Got about 9 minutes to the market
Must be
opens.
doing something right.
Yeah, it's a long road when we start down these things. When we come back, Kramer's Mad Dash, we'll count down to the opening bell, take another look here at the pre-market. Still a slew of corporate names we haven't yet gotten to, including Robinhood, KMB. There's some news on the regional banks and Boeing. In a moment.
What's the news on Boeing? AMD's looking good right now. Apple, not so much. Apple's like can't get out of its way here. Spice pumping though. Overnight's recovered everything from the sell-off yesterday. Looking good. Pretty interesting. All right, who's investing in that DJT? That DJT. That's so funny, man. People get so emotional about stocks. It's associated to somebody. I mean, if you knew what some of these corporate freaking execs do with their time, if they weren't so public, you'd probably have an opinion about their stock too. It's the best. That morning coffee is the best. I lost my lid to my coffee cup. That annoys me. All right, trade us. We got about 7 more minutes until a new opportunity to make money. Discover your home value today. No thanks. All right, man. I gotta switch this music up. It's making me sleepy. I think it was like chill music or something. All right, let's see if this is any better. All right, let's get ready to trade, guys. Here we got about 7 more minutes until the market opens. Happy hump day. Hope you guys are having a great morning. Let's get ready to trade. Make sure you guys come to the trade desk. Positive thinking, always positive thinking. Don't get too emotional on your trades. Remember that. Remember your patterns. Remember your discipline. Let's not try to get rich in one single day. All the good stuff that helps us become better traders so we don't get too stuck. No Lamborghinis for us today, maybe not, till we get better at what we do. Got to get really good and got to get consistent. Remember, that's the goal, right? That's why we come to the market. Oh, here's CNBC. They're back.
Time for Kramer's Mad Dash as we count down to the opening bell.
A piece by UBS today, a little counter grain. There's a lot of people who feel that Disney, which by the way is the top 10 performer so far this year in the S&P, is largely because of Peltz. I think that Peltz has played a major role. This is the proxy fight.
Sure.
This piece by UBS says sources of potential upside within the Disney model, including becoming an earnings compounder. Of course, talking about the parks being good. DTC, the direct consumer, they think it's ramping. Good margins. They expect it to be profitable soon. New price target.
Oh, Bitcoin 71,424. Bitcoin pop right now.
If
wow, that's awesome.
This is the subtext. If Peltz doesn't get on, there's something very good here. Now, I think a lot of this, including the $7.5 billion in costs that they want to take out versus the
Nice
$5.5
pop on
that they
Bitcoin
had
right now,
not
guys.
that long ago, is in respect to the fact that, listen, we hear the footsteps. We don't want Peltz on the board. But I would
All right,
say
oil
that this
pulling
piece
back a
says
little bit
return
today,
to
too.
greatness, in the same way that
Little
Peltz says
pullback
return
on
to greatness,
oil.
but going
10
a different
year.
way.
It's down a bit, not by much. And then the dollar. Sorry to talk over these guys. Dollar's up too. So careful with the stocks today.
But I think that Nelson has concentrated the minds of the board and the CEO, Bob Iger. It's an impressive ramp. It does say how much they don't want Peltz on the board to some degree. But you know what? Look, there are things that are happening, but I think they're happening faster than we thought. And that is what I say. Peltz is an accelerant. I don't know whether he makes the board or not, but he has certainly been a lot behind a rally that I think the company would say had nothing to do with him. And I'm taking issue with that.
Interesting. UBS was at 120. They go to 140, as you said. On Monday, Barclays went from 95 to 135.
People are buying. People are buying into it. Now, what happened last time is when Peltz was going to the board,
A little sell-off here on Apple. Small little sell-off.
From 115 to 80. So there's a lot of people who feel like, well, if he leaves now, is the
These
pressure
guys
just
don't
going to
talk
go in
much.
and like they'll lose their
Already leaving.
Their urge. I am concerned about that. I'm concerned about it because when if you're taking out $2 billion more in costs, maybe do that slowly.
3 more minutes, team. 3
If
more
you're trying to get
minutes, and we
transition going,
are
maybe you
gonna
do
be
that more slowly.
trading.
So I think that this is a mixed blessing. Again, I think
All right, AMD's a little pump on AMD.
Kramer, go away. But I did read Jim Stewart's piece this weekend, and I did not feel in the New York Times that Peltz has nothing to do with it.
Yeah. Good piece in THR today as well about Iger's so-called invincibility era being over.
Yeah.
It's coming down to the wire, though. We'll get more on Disney in a minute. Opening bell in less than 5 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street. Opening Bell Podcast.
All right. Sorry, guys. Just doing a little bit of billing here. Doing a little bit of billing. All right. Spice pumping. We are already at yesterday's high pre-market. So we're at yesterday's pre-market highs already. I'm sorry. We're at yesterday's highs pre-market, if that makes sense. So looking bullish a little bit. Careful with the rug pulls. We've been, obviously, yesterday we sold off all day. We actually opened around these levels here. So careful with the pullback. But AMD's looking healthy right there on the little pump here. And so is Boeing. Boeing looks like too. Is there news on Boeing today? And morning watch. Boeing is paralyzed, and this failing by its executive and directors is to blame. Boeing CEO Dave Callahan retires amid safety crisis. Departs from multi-million-dollar exit package. Wow, can you believe this guy? So the CEO of Boeing, right? He's like, fuck this, I'm leaving. I don't want to deal with all this drama. Oh, pump on the SPY. And what does he do? He fucking leaves, and then he takes like a multi-million-dollar exit package with him. Golden parachutes, man, for the CEO of Boeing. Right? People die, mistakes get done, all this stuff happens, and what do these guys just get to exit with a couple $1 million? That's wild, man. Only in America, dude. Only in America. It's a rigged game.
Hump day, yeah.
Hey, meanwhile, Bitcoin's pumping right now. I don't know what's going on with Bitcoin, but Bitcoin, it is pumping. Gotta play that Pump It Up song maybe, huh? All right, we got our bill out. Oh, man, gotta print that bill. Ooh, okay, Bitcoin. Yeah, Bitcoin 71,526. Woo! And all my holders out there, bro. All my diamond hands. 71,487. Shout outs to you. So with this music, though, man. This music is not doing it for me. Let's try some EDM. See if some EDM kicks in. All right, let's check that out. All right, traders. We got about 1 more minute, couple seconds here. Market will be open. About 30 seconds to go. Let's get ready to trade. SPY is pumping. Bitcoin's pumping. Apple's trying to recover. ADM chips sell off yesterday at the close. We're about to see where we can end up for the day here. So anyway, looking good for the day. Looking a little bullish. Don't get sucked in. Trade carefully, guys, out there. All right. Good luck. Good luck.
Hump day, yeah.
All right, man. Let's see if CNBC comes back on too, and we'll cut some of this music out. All right, there's a little pullback on the SPY here with a couple seconds to go. Good luck, traders.
Truth Social parent Trump Media extending its gains from
Good luck,
yesterday's
traders.
public debut following the company's SPAC merger. In a volatile session, the stock jumped by as much as 59% before closing up 16%. I think it was Yardeni last night, Jim, who said, you have to love the stock market no matter what you think the DJT.
Well, I think the thing that's interesting is because if you want Trump to have more money than the Democrats for the presidential election, take the stock higher. It's a cheaper way to kind of get around the election rules, but it is brilliant.
Hey, my Reddit short's working out. That's pretty cool.
Maybe they end the lock.
Oh, what's going on with Apple here?
Is control. That allows him to take money. It's a brilliant way for a rich person to run for president.
We'll watch. We'll talk about whether the stock returns to fundamental analysis in the near term, but for now, it's something else you think.
There are some people who told me, Jim, he laughs. It did not have good revenues, but it's a campaign.
Neither did Reddit. What the hell?
Let's get the opening bell and the CNBC real-time exchange. To the big board, it's Barclays and the WNBA's New York Liberty celebrating a multi-year partnership at the NASDAQ. It's Blackhawk acquisition, a SPAC.
Yo, shout outs to those guys.
It's IPO.
Yeah, the SPACs, leave me cold. They always have a very nice rosy hue at the beginning, and then they let you down. No, there was a SPAC that I was looking at.
Oh, Pfizer with a pop, guys.
That
That was good. Pulled back.
Getty Images, mentioned several times by Jensen Wong. You feed Getty Images into the brand new
GameStop, a little pump on GameStop.
It remembers it. So that if you wanted to say let's say an Audrey Hepburn,
Tesla, little pullback. Target up almost 1%.
Oh my gosh.
Russell's up almost 1% as well.
Video into it. So I asked that James Bond be fed into it. That will happen. All bonds. So you can come back and you can
I
say,
didn't have a
listen,
range
tell
on
me
IWM,
what
right?
Kramer's like versus Bond.
No, I don't.
But you really wouldn't want to do that.
Right. It's actually, I mean,
A little pop on Apple as well.
It's a policy group forecast, but Bloomberg has a piece today on the number of UK workers who might be displaced by AI. 8 million.
A little pullback on SPY.
I don't know about that. ServiceNow does some great work on this, and they think the productivity boost is going to be so terrific. That
Still
more
in the
people
middle
can
of
be
the
hired.
range.
So I think the displacement is overdone. I think the productivity is underdone. So I think that's not what is insane.
Boeing, little
what I
pop
heard
on
last
Boeing.
week. I don't think Michael Dell would tell you people are going to lose jobs. Jensen, by the way, of course, is just saying, listen, the number of job multiple will increase dramatically. It kind of reminds me of what
I'm a little
happened when
cold.
we had.
All right, Reddit with a
before the
flush
Civil
here.
War,
Now we're short on
they used to
Reddit.
make
None of you
shoes
guys
by
know that, but we
seamstress,
are short on
and then
Reddit.
suddenly they make shoes by machine, and that
What's our
frees up
short?
a huge number of people and creates more machines. And this is something that you have to think about as the classic industrial revolution that created more
35
jobs.
put for
Not
April
It's hard to
19th
find
on
an innovation
Reddit.
that resulted in less work.
Yeah.
Speaking of productivity, Jim, it's going to be necessary to offset concerns about inflation. JP
Yeah,
Morgan does have
yeah.
a take on the port in Baltimore.
Yes.
Unlikely a major factor for macro. We're already seeing rerouting to the West Coast. Port of Virginia is going to take up some of the slack. A lot of cars come in through by land
But
from Mexico.
I don't know. I have Norfolk Southern tonight. I don't think they'll say that it's really that additive. And Ford yesterday said, John Lawler said it will hurt. I think that there
Something's
could be
going on
some
with
long-term
Pfizer.
negative consequences. And I
Oh,
wanna be
Boeing,
sure
pop on Boeing. Good thing we
what's
closed that
going
short
and
yesterday.
What that does to slow down cars that are bought in knee parts, and of course our exports. Coal, big question. So I'm not so sure that it's something that can be easily dismissed.
Yeah, they're talking about maybe
You'll pull back
2.5
on SPY
million,
here.
Tons of coal getting
I wouldn't be open
displaced.
to a short on.
There's also the concern about, well, the NTSB now has the recorder. Farm equipment, March is peak period for import of farm equipment because of the planting season.
This one worries me, and I think, by the way, that CSX was making a really big comeback, and they've got some terrific auto exposure
21.
and great coal exposure. Now, remember, that if you talk about global warming, China and India just building coal plants incredibly fast, and it's very hard to get. People don't realize how hard it is because of unions, because a lot of people are employed. There's like more than over 2 million people are employed in making coal in China. You don't want to switch that rapidly if you're China. So I I'm
Trying to
not
take a
as-
short here on
as
SPY.
sure that it won't hurt their quarters. I think it's surprising to see
Ah,
since it's come
it
down
failed
like
me.
very much. It's really well managed.
Okay, let's see what
Let's take
happens
a
here.
pause
Yeah.
21,
By the way, speaking of this,
521
Carnival
put.
is the worst opener on the S&P. Did have some guidance out, but say that it doesn't include the impact, Jim, of the port disruption.
Yeah, that is unclear. Obviously, I'm not on the conference call, but Royal has been such a winner here. There's no need to go down the food chain. Just keep buying Royal. It's funny, you know, when you read the Disney apologists all saying, "Don't forget Disney ships." Well, I mean, Royal's in the ship business. They're in the travel business,
that's true.
and that's where you want to go. I am surprised at Carnival.
Oil's interesting today, Jim. Some of these inventory numbers have been a little bearish, although retail gasoline, AAA, above
Yeah.
350 for the first time this
and
year.
you know, Marathon Petroleum.
Yeah, gas is expensive, especially in California. When I was in Arizona, it was like $1 cheaper.
12 states, they do almost 3 million gallons. 3 million barrels a day. That is.
All right, we're in 0 DTE puts today. Not financial advice. You will lose money. Also have some Reddit puts going on. Trying to just. Oh shit! Pfizer's dumping, man. GameStop's up.
On WTI.
Up from the bottom.
Big run that this is probably the level where our producers, and I'm talking about the big-time producers, start opening up the spigot.
All right, see that little bit of a drop here on the SPY. See if that starts to pay us out here.
And so this is something to watch. But it's the big guys. As Pioneer, for instance, might have been. That's that's an Exxon now. We have to watch what Occidental does.
Right. Tesla, a lot of commentary today, Jim.
Mixed.
Big piece in the Times about the company's
AMD flushing too.
stickiness in China.
All right, puts are in play right now, guys.
Politically. But mostly it's things like Redburn saying that the possibility of negative growth on deliveries is increasingly likely.
Yeah, and Citi goes from
Pfizer's dumping. I don't know what's going on with Pfizer. Down 0.11%. Reddit, we love to see a drop. We're short on Reddit.
To you that in the last 5 days of negative articles and pieces about Tesla, the stock is not going down. That's why my thesis is it is bottoming here. And I do think that it will surprise people. The last 4 weeks of Steve Scher's Hertz regime, when they were selling Teslas, the price went up. Let's watch that.
Tesla's selling off right now.
From where they first announced the plan to sell.
Yeah, Baird today extends what they're calling
Lyft is dumping.
Fresh pick on Tesla, but you're right.
Not sure what's up with Lyft. Apple looks really good here.
Yeah, this is a level where people really do come in and buy it. I know that there's some people worried about EV charging, clean sparks going up. Look, I think that this is a level where you won't get hurt if you buy Tesla. I think that Tesla has the ability to be able to turn itself
fucking Jim.
around. They can lower
Shut
price.
up.
They can take share.
AMD pulling back a little bit here.
EVs are going away. I think that it's just we've got a slower ramp. You look up at Ford. Ford very committed to EVs, but they also have tremendous tremendous hybrid. And anything that's a mix that puts more hybrids out.
Apple's looking good here. I don't know what's going on with Apple right here.
EV, meaning you have to create fewer EV, is bullish for Ford, but they came out again yesterday and talked about this port situation. I don't think anyone's going to come out today, Carl, and say, you know what, we got to take advantage of the port situation. There's this loss of life, and we're watching the videos, and we can't believe it in real time, loss of life. So this is not a buying opportunity for a port.
Yeah, it has turned from a rescue into a recovery operation.
A little bit of a pump here on SPY dump, but it came right. It recovered nicely.
Yes.
Ton of news in retail, Jim.
All right, Apple looking good here. 170.101. All right.
On these earnings, Goose cutting 17% of corporate.
Goose has been just a house of pain since
Jump around.
H&M, gigantic.
All right, Apple pumping 171 now. I don't know what's going on there, but looking good here.
That are so precipitous that when numbers are cut, people come up and say maybe this is the time. Retail's been very strong.
Owning Apple are hurt right now, according to Jim Cramer, due to China sales.
Dick's, just an incredible story. I mean, even though that Nike's down, Williams-Sonoma Furniture's down. I mean, these are Gap stores, obviously.
And you'll have RH to kick around tonight when we know that we get color out of those guys.
Oh my! I mean, but some guys are.
Russell's pumping.
Much, I guess.
Lyft is dumping, but the Russell is pumping.
I happen to think that this is the right level to do RH too. Look, furniture's making a big comeback. We're really starting. We had a big up for COVID, then precipitous decline, and now it's making a comeback.
All right, Apple's looking solid right now.
I got this from
trying to get a little bit of trying to scalp the 0 DTE here on SPY. All right, Apple's pumping 171.11 up 0.82%. Apple's looking good right now.
It's what's been driving Lowe's. I did not agree with the downgrade of Lowe's today that we got from Davidson.
That's a downgrade on Lowe's?
Ellison's already done a good job. Marvin
my
Ellison
partner, man. It's my
has
partner.
already done a good job. He's going to crush it. And by the way, in gardening season, I'm 50-50 Lowe's, and I always send Marvin pictures because the Lowe's have really done a giant job in garden to take share back from Home Depot.
There's a couple nice Lowe's in your not far from you in Brooklyn.
I like going to Lowe's.
Yeah.
I like it.
As for GME,
All right,
Jim,
Apple
you mentioned,
170, 123, looking really good right there.
Down about 13 at the open here.
Well, it was down 20 last night at one point, and there are some incredibly negative notes. Wedbush says its demise is coming. When you see that word demise, that gives you pause. It was a bad miss. 29 was the looking for. 22 is what they got. The collectibles, which have been the savior, are down horribly, down 25. Some rules about board investing that we're not clear about Ryan Cohen, so I don't want to go into them. No conference call. They have no conference call. This is
Lyft is dumping. I don't know what's going on with Lyft.
Berkshire Hathaway, and arguably the worst, GameStop.
Yep.
Everybody else in between.
Yeah, it's been a couple of years since they called the shorts dumb stormtroopers.
Yeah.
But stock's way down from those levels.
Well, in the end, you gotta have.
AMD's dumping too. Apple's looking great, man. Looks strong right now. I don't know what's going on with Apple.
They've never really been able to reinvent themselves.
The top 10 trending stocks. Jim Cramer says it's hurt. Oh, it's probably because Jim Cramer said to not buy it. That's usually how it works.
Look, you got to hand it to them. We got to hand it to our friends at Morgan Stanley, and it's because they.
Oh, Apple's pumping, guys.
Well, that was like, wow.
Nice.
I always had that relationship. But Reddit is down today, which is actually strangely a good sign because it can't keep going up. It's
I'm short Reddit.
Go up and up on the same news over and over again, because that would be a sign that the Wall Street Bets people are playing havoc.
Yes.
Fully knowing the Wall Street Bets has tried to wreck my reputation for 4 years now, and that's why I stopped following them. I only hear it secondhand, but it's usually pretty horrible.
Right.
Wall Street Bets.
It's always good to be consistent.
300-point rise here on the Dow at the open.
All right, chips are dumping.
The, Wells target increase at GE, which they go to 200.
I think that, first of all, Larry Culp is there to stay. Can we stop those articles, please? Second, gross margin expansion of 300 to 500 basis
Well, Apple's
points
looking
after they
solid,
spin
man. I don't know
off
what's going on with
Vernova.
that right now.
But Vernova's very interesting because you look at Constellation Energy, and that stock's been the top 2 performer. And they do nuclear.
All right, so we are short. We have some put contracts on Reddit. I think like middle of April.
Larry Culp is a genius. We all know that, and he's come through in flying.
Yeah, Apple looking great right now. AMD. I don't think, did we buy? Yeah, we bought some AMD yesterday, some shares.
You're right about that. Yesterday, Moody's puts them on watch for a potential downgrade.
And there we had Calhoun saying they have to buy Spirit to get a hold of the fuselage. Boeing remains on my troubled list. I don't think it should have gone up when they announced that Dave is stepping down. You need to go up on orders. You need to go up on cost down. You don't need to go up on Calhoun stepping down. That is not. That's good for the regulators. They want to see a whole new group. But what we need to see is earnings, and I don't see earnings.
Speaking of downgrades, S&P cuts 5 U.S. banks, Jim, on CRE exposure, including First Commonwealth, M&T,
commercial real estate.
Synovus. There are some that have too much. I would point out a note where a lot of people felt that Wells Fargo had exposure. No, they have very little exposure. This is Charlie Scharf. And there's a second downgrade of Wells Fargo. And, of course, that's at the same time raising numbers. So give me a break. I don't think
Apple's really pumping,
matter.
guys. Up 1.5%. 1.15.
They do very well.
Nice move from the bottom here. That 170 level has been really key in regards to support. So, right, it's a key level there. Nice jump, nice pop.
It's not an expensive stock. Charlie Scharf has finally got his own team in everywhere. That's the one.
Conversely, on the CRE front, SL Green gets an upgrade at Barclays to equal weight.
Look, I like to hear them.
They
invented the east of Grand Central, and I don't know why people were downgrading it so badly. It's a fantastic property. It's a very well-run company.
All right, there we go. Bitcoin. Bitcoin, everything's pumping right now. Where's Bitcoin?
GameStop.
Check Bitcoin. Bitcoin, I pulled back a bit. 74.62.
You could really bless that thing in the moon.
We've spent part of the week talking about M&A chatter, and it is chatter, Jim. But yesterday it was international paper. Tomei had some comments looking at healthcare possibilities. J&J, this report in the Journal about Shockwave.
I thought that'd be incredibly shocking.
All right, so Apple's pumping today. It's up $2, 1.21%, looking really good. SPY is a little bit of having a little bit of a hard time here at the pre-market high levels. We did take a quick short on it. Probably close that out, but we'll see. We'll see the next candle. It's a 30-minute candle. Let's see the 15-minute.
Just sell. Okay. The lawsuits, when they pop up,
there you go. So there's our 15-minute chart. Oh, and it's our 5-minute chart. Ugh, who trades 5 minutes?
It's cookie cutter. Once you have
all right, there we go. So there's our 15-minute chart. We're going to see if we can get a little bit of a pullback below the 5-day EMA line and stay in our short. Otherwise, we're going to exit that. So that's our next candle now. All right, so we're starting to see the red there. We want to see that. No, it's green. We don't want to see that.
Yes.
He moved on.
Yep. But can we argue here at this point that the burner is de-thawing after some of the energy deals and now these discussions?
Absolutely. It's the right way to look at it. It's one of the reasons why we've stuck with
all right, starting to see a little bit of a pullback here on SPY. What we want to see, our 0 DTE, see if it pays.
This is their game, and they can do a good job. Look, I always enjoyed listening to Gorman. He's now on the board of Disney, but I think he would be the first to tell you.
The way Apple's moving, man, I'm a little concerned about this short. They might just jump out of that.
Ted Pick needs to make a statement. Now, he's a brilliant fellow, but they need to say, listen, we're ready for the IPO window and we're ready for M&A. If they don't do that,
look at Apple. We're about to hit the. We're about to be in the money on Apple.
Yeah. I think. Did you say you have Kimberly on later?
Yes. Now Kimberly is doing something that I've long wanted. They're taking their.
All right, Apple's pumping, guys. It's up 250, 1.5%.
But for regions. Because to sell diapers, they come back.
We have calls, 172.50 calls here for tomorrow.
To sell tissue is a local thing, and Mike Hsu, who's done a great job turning earnings, but not the stock.
Reddit's dumping too. We have a short on Reddit.
I like this. I actually debated with Jeff Marks, and we were going to talk about it for our club.
Oh, look at Apple, guys! Wow.
Procter and go to Kimberly because Mike Hsu is taking action.
All right, we're going to close out our SPY short here. Just because of the way Apple's moving, so we're going to just close that out. No big deal.
You never get wrong buying Kimberly. What can I say? I mean,
Apple is on fire. We don't know what's going on there. It looks great.
Kleenex, and you gave me the one that I buy, which is Costco, and you always feel like, wow, why did I try to save money?
I'm going to just put that at closest.
Yeah, they're going to incur about $1.5 billion in charges as a part of this reorganization.
Yeah, and look, Mike Hsu is a guy who.
See if we would have hit it or not.
Mike Hsu is a guy who has had it, I think.
All right, we're listening to Jim Cramer. Fade Jim Cramer.
They can excel in sales.
Reddit's a little pullback there on Reddit. We are short on Reddit as well. Pfizer's having I don't know what's going on with Pfizer, man. Pfizer's just spiking and dropping. I don't know what the hell's going on with that. Tesla, a little pullback on Tesla. Lyft is dumping, down 3.38%. You know what's going on with that. Russell pulled back a little bit.
Schwartzman, Qualcomm.
What's the play right here? We're already in the money, almost at the money here on Apple.
President Xi, I don't think he'll do this, but Pfizer, Dr. Bourla, offered them all of the vaccines they wanted. They had a better vaccine. She said, no, we have a better vaccine. As an olive branch, why not take all these free vaccines? It helps them, hurts us. But that would be admission that his vaccine wasn't that good, which would be ridiculous since we know it wasn't that good. Evan Greenberg, AIG, predecessor, always had the best relationship with China. Qualcomm.
All right, traders, happy hump day. What are you guys doing today? What are you watching?
They've made a lot of deals with different providers.
FedEx was in the mix as well.
This is a very home crew audience. These are companies.
Probably should have stayed short, but it's all right. No big deal. Look at Boeing, man. I don't know what's going on with Boeing.
I hope it's not a lecture. I hope it's a two-way street.
Right.
We're getting tired of lectures, and so's the rest of the world. Hence why Mexico is our #1 trade partner. Hence why everyone I know is pulling back.
A little bit of a pullback. It gives you clarity. When you go zoom out a little bit on your charts, you can see a little bit better what's going on here.
This is the last chance ranch for the no Cold War.
Last exit, really?
Yes, last exit to
Brooklyn?
A decent book. They made us read that. It's like my daughter asked, did you like Jack Kerouac? I said, I had to pretend that I liked him.
300-point gain at the open here for the
Dow
as the Bulls will try once again to break this 3-day loss. Watch bonds as well. One of the most important, at least Fed discussions tonight, 6 p.m. will be Waller as we await Powell's.
Does he know that Mad Money's on that time? I mean, can he hold it till like 8 on our program? He's done.
7:01.
I'm rebelling against programming now. Just kidding.
All right, 52.33 on the S&P. I think we gapped up, so we'll see how that plays out. All right, I'm gonna just mute the CNBC thing here. All right, continuing to watch. I don't know why Boeing is pumping, but it is. Just they continue to just have terrible news day in and day out. AMD, a little bit of a pullback at the open. Not sure what's going on. We did take 0 DTEs on SPY. We just closed those out really quick because Apple's really pumping. So Apple, we have 172.50 calls for tomorrow. We're like maybe 20 cents from being in the money on that. Nice pump on Apple today. Don't know what's going on. We just know that it hit a major support level. So this white line here is a major support level on Apple. So once it got down to that level, it just pumped right up. So good for us. And we do have a Reddit short out for April 18th, $35 strike price on the puts. We're just, I mean, that's already making a little bit of money.
Damn.
Yeah, that Reddit, we're up like $5 on that Reddit. I mean, it's got a little bit of way to go, but I think it's done going up. Not just my opinion. All right, just want to make sure that that's not too loud for you guys. No background noise. I just don't like the quietness sometimes, so I have to have something else in the background. You know what I mean? All right, Donald Trump stock dumping right now. No, it's not. I'm tripping. It's up $8. It's up 14% from the close, right? So it dumped at the close, but it kind of came back up. All right, there's AMD with a little bit of a pop now. Chips were selling off earlier. All right, looks like Apple chilled out a little bit too. All right, we did have 0 DTEs, but we closed them out just because we were watching the price action. Excuse me, kind of turn around across the market, so we just closed that out. But it would still be in play. All right, we're going to continue to watch AMD here. We are sitting on shares on AMD. So I think we opened them yesterday at 182.45. So we're a little bit down on that, but maybe we'll double down on that. It had some price action yesterday. It spiked for no reason, kind of at this area here, like around 9 o'clock. What is it? Around 8 a.m. It popped, but then it sold off. Everything sold off at close yesterday. I don't know if you guys saw that. You guys can see that on the SPY. All right, we're going to put this at 30 minutes. On time frame on SPY, just because we're not in it anymore, so we're not going to be watching it as closely here. All right, let's see what else is going on. Reddit shorts playing out. DJT's dumping a bit. Pfizer is interesting today. Just kind of been popping and dropping. It went as high as $27 and as low as yeah, it's been up by like 50 cents or so, the range. Good thing we closed our Boeing put, and I'm glad we kept our Apple open. So we're about 15 cents away from being in the money on Apple. Good day today so far. Yeah, that short put would have been working so far. Would have still been working. All right, good move on Apple today. Solid. All right, guys, we're staying patient. We're in some positions here. We're just gonna stay patient today. It is a short week. It is Holy Week. It's Good Friday. On Friday, market is closed. If you guys don't know that, find something to do. Like we're sad because the market is closed. All right, man. That Apple's about to be in the money. It's looking good. Red is continuing to fall. It's down $5 today. Down about 8%. We bought some shares of GameStop. We played the earnings and got clapped, but it was real small. It was just a handful of shares, nothing too crazy. Earnings is super dangerous to play, man. You got to be careful with earnings. I like doing the what they do, the 2 standard deviation or the ghetto spread. Something that we learned with Josh Answers at the trade fraternity. He teaches you about doing a 2 standard deviation and just buying contracts outside the money or outside the expected move, and sometimes they hit. Sometimes we have really good opportunities. Like for example, Lululemon last week. I think it was last week, right? Like let's say you took a short or you took a put on Lululemon, you'd be up significantly, especially if you were that far out of the money. And they're really cheap contracts. Oh man, sell off. Look at this, sell off on the SPY, man. Damn, our 0DTs would have hit. Fuck. Yeah, they would have hit. We got out of those. So SPY selling off right now. So our 0DTs would have hit. We got out of those. Actually, we're down $4 on them. I mean, Apple's pumping though. You don't care about SPY. It's still pumping. Yeah, our Apple calls are printing right now. Those are doing really good. Those are in the money now. Let's see if we can stay up here or get really above it. And so are our shares. So we have some Apple shares as well. Yeah, pop and drop on Bitcoin. Oh yeah, our Apple trade's looking good. Yeah, it was 30 shares. We got 30 shares of I think it was like $500. Wow, look at this candle on SPY, guys. Oh, Apple's continuing to power higher. Yeah, so see, I closed down my SPY short because I was watching Apple, and that kind of didn't work out. So, Jesus, what we're listening to. All right, Apple pumping 172.45. SPY selling off here. Our 0DTEs are now closed. We lost $4 on that. Probably should have stayed in them, but no big deal. No big deal. Tesla selling off a little bit too. Tesla's down 0.35%, about 59 cents. I didn't do the range on Tesla, huh? Oh no, I probably should though. I'll do it here with you guys in a little bit. All right, big sell-off on SPY. Apple's pulling back. You'll pull back on Apple. No, that's a big fat candle, man. It's like a bearish engulfing candle. What we would call a 2 down on the strat. I'm learning the strat right now. It's actually a pretty cool system. I've been following Stocks After Dark, or SAD. He's on Twitter, and learning a lot about that and how that works. Wow, big red candle, guys. Here, look, it's swallowing up. Yeah, what was happening here? So what's the news? Bitcoin, Ethereum, Dogecoin registered little change amid bullish momentum. Amid says 160,000 could be conservative price target for the king of crypto. Damn, we're gonna hit 160K, baby, on the freaking Bitcoin. That would be insane. It's at 70,043 right now. It pulled back. It had a little pop, but it pulled back. Yeah, Lyft is down 4%. Tesla's pulled back a bit as well. 177. Oh, I was gonna do the Tesla chart. Let's do that. Let's do that really quick together. So I'll put Tesla here at where AMD is at, TSLA, and I'm gonna do this range chart. I mean, it's we've got like one more day, so it's not like it's gonna help us too much, but just to have something to do here while we're waiting for the market here to. All right, so the range for Tesla this week. Let me do this one. I should have done this on Monday. I mean, I did this. I did all this work. I just didn't chart it on the chart. So Tesla, we have 170.83 was the price. So let's bring up my calculator. 170.83, and we're gonna do a plus of 7.46. 178.29 to the top. So 178. All right, it would have been to the high side, right? 178.29, yeah. That would be the top of the range there. Tesla's dumping. And then let me make the bottom of the range here. All right, so let me bring out my calculator again. And Tesla was 170.83. But this time we're going to minus 7.46. And we're going to get 163.37. And that's our bottom of the range here. So we already hit the top of the range here on Tesla. I was short Tesla just based on my range here, but not financial advice. I would just be careful doing that. All right, put AMD here. All right, so what I did there is what I call the weekly range on the stock. So sometimes you'll see on my chart, you'll see like these green bars here. And I'm charting it. I'm charting the range for the week. So like, what's the range for the week? All right, guys, 7 a.m. on the West Coast. Thank you for joining us today. I'm Shimano Trader. This is The Spread. We are a live trading show Monday, Wednesdays, and Fridays from 6 a.m. to 9 a.m. Pacific time. Thank you for tuning in. Please do not forget to subscribe. We do come on live. We come on live on occasion, too, just depending what's going on in the market, my availability, obviously. Yeah, thanks for joining us today. Please subscribe and get notified when we come back online. Subscribe to our YouTube channel. Everything is a work in progress. So I appreciate you guys being here with me today and your support. And yeah, welcome to The Spread. Happy Hump Day.
Hump, 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 hump day.
Yeah. All right, traders. All right, continuing to watch here, SPY dump right below our level here. So if it's going to recover, going to continue lower. Apple is in the money now. Looks like it's getting ready to flag here and hopefully continue higher. We are at our target price of 172.50 for the week. So whatever happens here with Apple, man, it looks like it's all good right now. So we're going to continue to watch that, ride that upward momentum and see what happens. All right, Apple's looking amazing. Our puts would have worked out, but they got screwed on our puts there. All right, just closed out my my AMD shares. I just bought a little bit of it, but there's no point in staying in that if it's just going to continue selling off today. So what was our sell price here? 176.74. So didn't hang on to those at all. Yeah, so we're closing out that position. Wow, big sell-off, guys. Wow, we're dumping. We're dumping, guys. Look out below. Apple's holding. But, man, our 0DTs would have printed today. Damn. Yeah, I got scared out of those, man. I really got scared out of those. Our shorts are working on Reddit, though. That's perfect. Pfizer, nice pop here on Pfizer. Gonna add to my Pfizer. So now our average on Pfizer is 27.72. Okay, perfect. All right, we're gonna keep our Pfizer there. Yeah, everything's selling off, guys. Be careful out there. Big sell-off. Big red candles all over on the board. Wow, shit. My 0DTEs, man. Oh, my God. Never fails, bro. Never fails. Yeah, I'm going to take my Apple close here. Screw it. All right, guys. So we just closed out our Apple just for precautions here. We don't have a lot of time, and we're already at the money, so we'll just take a small gain on that this week, and we're gonna be okay with that. I'm gonna be okay with that. Believe me, I'm okay with that. Yeah, we're fine with that. All right, so big red candles here at the SPY. We did have 0 DTEs, man. They would have printed, but we didn't get them. Closed out a little too early there. Let's just check levels here. It's okay. It's all right. Everything's okay. Boeing looks crazy here. Marvel's up big. Yeah, continuing to sell off here. Wow, man, at 0 DT, we had it. Yeah, we're continuing to move lower here. You guys just be careful out there. I'll take our profits, no problem. I'm not scared to take our profits. Where's our next level at here? Pre-market low, 518. Shh, will we make it down there? Dude, that'd be crazy if we make it all the way down there. I think they're 25 cents. Our Apple's continuing higher here. We'll prematurely close our calls, but it's okay. If we didn't lose any money, we're gonna be okay. I look at Boeing right when we're thinking of going long on it, starts to go the opposite way. We'll pull back on Pfizer. Game kind of chilled out. Russell sold off, lift down big, almost $1. Yeah, Apple looks hella strong there. Probably a little premature on that close, but I'm okay with it. I'm really okay with it. Wow, look at that. Denmark. Sean's crushing it. Yeah, we got a meeting tonight. Man, Apple's continuing higher, guys. Probably a little premature on that. It's all right. We'll see if that plays out. I'm doing 521 calls right now for SPY on this sell-off. See if we get a little bounce here. Get back into 521. So now we have these are calls, right? Change this. Let's see if we get this this pump here. Our Apple's continuing higher here. Big. We already closed out our calls on this. Oh, lady, leave me alone. Wow, Apple's pumping today, guys. It's looking really good. It's a pre-market low. This area is a pre-market low for SPY. But I think chips are selling off. That's probably where the big sell-offs are coming from. Our Reddit short's working good. Tesla starting to recover a little bit. Lyft all the way down. Down almost $1. The recovery happening here with the SPY. Hopefully we can bounce back up. It's a good level here to bounce. Yeah, big sell-off though. Nice. All right, Boeing continuing higher here. Everything kind of chilled out a little bit after that flush. Yeah, it looks like chips are selling off, guys. That's probably the play right now. You're bringing everything down. Yeah, continuing to go lower here on the SPY. Oh, we're continuing lower here on the SPY. Damn. So we missed that level. We're most likely going to get down to that 518 level. See if that plays out. See how that plays out. See if we continue selling off here to that 518 level, where I think we should be able to get close to that. I don't know if we'll ever bounce, but if we get down here, maybe we'll bounce to 521. But right now, we'll take this short. Apple kind of chilled out at that level. Look at this flush, guys. It's continuing to happen. There it is. I don't know if we'll recover today at all. Man, that put was working so good. Probably like another level here. Maybe right here somewhere. Coffee's so good in the morning. Looks like DJT found some support there. Russell's made a little comeback. Target's pumping higher. Tesla's recovering. Lyft still down. Still down at 5%, almost $1 again. All right, traders, what are you guys looking at? What do you have any questions or anything? Let me know. We're just continuing to watch our charts here. Stay patient. Target's kind of breaking out a bit, so Target's looks like a good pickup right now. Yeah, Lyft's down over $1 now. And Boeing's looking good. Looks like we're recovering a bit here. Apple's pulling back a bit. Yeah, surprisingly, Boeing's surprisingly strong here. Yeah, Reddit's continuing to drop. Pfizer's starting to chill out, bouncing off the 5-day EMA line though. Bitcoin, a little bit of pullback, 69,082. Apple, a little pullback there on Apple. You know, it gives credence to that term, selling into strength, right? We sold our Apple calls, and we're out of that now. Didn't feel good about it, but now we do. So it's just like an emotional roller coaster with that. A little chilly. All right, Tesla's kind of recovering. It's still at the top of the weekly range. Yeah, Bitcoin pulled back pretty significantly. Russell, nice recovery on the Russell too. See as those calls work out for us here. This is pre-market lows here. Boeing, man, resilient. Let's look, 200-day moving average. Got rejected and it got above it on the hourly. What a move on Boeing, though. All right, traders, kind of low volume here. Kind of everything got kind of crazy in the morning, but everything's kind of chilled out. Lyft continues to work its way lower. I don't know what's going on with Lyft to see if you get downgraded or anything. New Florida law to ban social media for kids under 14. Require ID checks on all ages. What's at stake for Meta, Snap, and Tech? Yeah. Yeah, I don't know why that's on the Lyft news. What this thing looks like on Boeing to you, you know? It kind of looks like can't really tell what kind of a pattern that is. It looks like we're gonna go lower today, right? Like that's kind of the vibe here. And that 518 may play out. Yeah, things just happen so quickly, man, in the market. Look at this level, right to this level here. All right, so I think I did my range study for the day. Can't find my coffee lid. That annoys me. Makes my coffee cold. Oh, do I get an email? I thought you were one of my distributors, dude. Sucks. Okay. All right, so a bit of a look like calls here on SPY. See how that works out. AMD selling off though. I mean, that's why probably Sean was saying about SMCI, the why it was selling off, right? All chips may be selling off. That's short right there. The bubble pop, Nvidia's down. Oh man, the Nvidia's down pretty big too. That's probably what's dragging down the SPY. I like AMD though. It's like the poor man's Nvidia. It's selling off though, so you know what's going on with that. It's in this range. It's within its weekly range. It's kind of been hanging out the middle here. Reddit's still falling. Tesla's recovering nicely. Target keeps working its way up. Top of the range here. Did I do it? No, I don't think I did one for Target. Yeah, Lyft continues to sell off, man. I wonder what's going on with Lyft. All right, traders. So that's kind of the game plan today. Here we're sitting on SPY puts, 518 SPY puts. We do have some calls in play here, but looks like maybe the puts are going to print more than anything else on the call side. Looks like we're a little bit bearish going into the morning here. So I know we have some Fed speakers today, but definitely it looks like the chip sector is experiencing some pretty significant sell-off. So just be mindful of that. I feel like my heater's not working right today. Yeah, but so we're gonna just be watching those plays today, and try to stay patient here. It is a short week. Don't want to just jump into anything because tomorrow's the end of the week already, end of the trading week. I know. You're sad. I know. Me too. I'm sad with you. Okay. I'm just wondering we should close our calls, just leave our puts, let our puts play. Probably gonna do that. All right, so we closed out our calls. We're gonna let our puts run. See if we can get down there 518. That'll be pretty cool. All right, so we're just gonna let our puts run here. See if they go. We're gonna preserve our call. So we're gonna close this out. Just leave that this is closed. Make a note that it's closed. I'm gonna see if we let our puts run. If we do get down there, it should be a nice premium. Meanwhile, Boeing looks like it's just recovering. Looks like a little cup. No handle yet. We do have a Reddit short. I'm gonna put it on the main chart here. So if anybody cares, that we are short on Reddit. So we'll leave that up there, and then we'll move our AMD over here. I don't know how much that, if it even is going to play out. AMD's selling off. All chips look like it's short started to play today with AMDs. I mean, with chips. GameStop's making a little bit of a recovery. I'm down $2 still on it. All right, that's our setup right now. We're closed. We're out of the Apple trade. So we're done on that. Yeah, so 170, 134. Yeah, we were in Apple calls, but we got out of those. Just didn't want to wait, you know, till the end. So, I mean, you're already in the money. They're not cheap contracts. All right, DJT kind of hanging tough there. Pfizer looking okay. Lyft maybe found a little bottom there. Maybe. We're continuing to sell off on the SPY though. All right, SPY continuing to sell off, picking up steam there to the downside. It's a lot of selling pressure. This might be the bottom here, though. But it's a good lesson if you're here watching this sell off happen here on SPY. See if it's gonna hold. Yeah, Boeing looking strong. I think we close that out. Just how it looks up here, just to give you guys a visual. It's starting to get a little top heavy up there. So it's kind of flattening out. I read it start falling still. This looks good up here. All right, guys, stay tuned, man. I'll be back. Let's check it out, see what's going on here.
This has been a fantastic start to the year. We delivered another strong quarter that outperformed guidance on every measure while concluding a monumental wave season that achieved all-time high booking volumes at considerably higher prices. A lot of bullish talk there from Josh. We're going to talk to him in the next hour on Money Movers about supply, demand, and of course what the Francis Scott Key Bridge collapse in Baltimore is going to mean. They sail at least 2 ships out of that port.
We'll look forward to that next hour on Money Movers. Meanwhile, Apple set to hold its Worldwide Developers Conference on June the 10th. It comes as the stock sits in correction territory, down more than 10% from its recent highs, bouncing today, as you can see, at 1.4% back above the 170 handle. Our Steve Kovac joins us now with more on what's riding on this big event when it comes to Apple's AI strategy. I mean, Steve, my first question on this, do we know this is definitively focused on AI, or could there be other things? Have they been explicit about that fact?
Yeah, we don't know definitively, but I'm going to show you a tweet here from Apple's marketing boss, Greg Joswiak. He, after they announced the date yesterday, he tweeted that the WWDC this year is going to be absolutely incredible. And you'll notice he did that Donald Trump thing where he capitalized the A and the I in absolutely incredible. A lot of people reading into that this is the long-awaited AI announcement that Tim Cook has been teasing for the last, I don't know, 5 or 6 weeks or so since they reported earnings.
That explains the Apple pop today.
A huge pressure on Apple, some of it self-inflicted, to really tell a good AI story, Wilf, as its peers have been just lifted up on this AI boom. We kind of know where Meta stands on AI, where Microsoft stands on AI, where Google stands on AI. We just don't know what Apple's position here is, other than they're kind of pointing to prior products and saying, you know, recasting them as artificial intelligence when they hadn't necessarily before. So, look, we got those reports last week that there might be some partnerships that they would involve Google's AI product called Gemini over in China, where Google is banned, of course, and doesn't operate. They would use Baidu, which they already have a search agreement with. But as to what this actually looks like, there's just more questions than answers. Of course, we'll get updates to the various platform OSs like iPhone and iPad and so forth, but it's really going to hinge on what the AI announcement is. And then let's spin it a little bit more forward, Wilf. Let's talk about September. So over the summer, we'll get an idea of what the AI features everyone will get, or all Apple users will get. And then in September, to sell more phones, they're going to have to make some exclusive AI features, really brand it as an AI phone in order to convince people to upgrade who maybe would have waited a little bit longer, Wilf.
So, Steve, it's fascinating, by the way, to see that year-to-date snapshot and how far behind they are in terms of share price performance. No doubt synced with this AI topic when you see how far ahead NVIDIA is year-to-date. My question, particularly for the short-term event, the AI event that we think it's going to be, is where expectations are. I mean, often you go into their product event and the hype and the need to deliver with something amazing with a new iPhone is there. Because of this sort of skepticism around AI, could they really surprise the market with something positive?
That's what I mean, they kind of have to. Tim Cook, in his own words, has said Apple will break new ground in artificial intelligence. To me, that means something we haven't seen before. So what that looks like, I don't know. I'm really reminded of what Apple looked like about 10 years ago when it was battling Samsung, had to put out those big screen phones in order to ease investor fears, wondering if they could do the same thing with AI. We're going to find out in just a few months' time, Carl.
It's pretty ironic that the DOJ is accusing them of having no competition when they're now in a fight for their life on AI with everybody else.
Exactly. That's exactly
That might be dramatic, but that's the competition right now.
Yeah, it's going to be interesting to see in the audience on the 10th, Steve, whether or not these new features are met with the question, well, what are regulators going to think about that one? But that's still a few weeks off. Steve Kovac on Apple, important story. As we go to break, check out some of the biggest gainers on the Dow this morning. Merck's going to power this 230-point rally the most, followed by Intel, Verizon, Boeing. Only a handful of components in the red. ServiceNow, Visa, Microsoft among them. Meantime, our Christina Partsenevelos in Austin, Texas today, looking at the next big thing on the horizon for the AI boom. Hey, Christina.
Well, when you think of the next big thing, you often think NVIDIA, but mega cap tech companies are spending billions on in-house labs like this one. Coming up after the break, I take a look at how they plan to compete, dethrone, steal market share maybe away from NVIDIA. That's next.
Got nothing to be scared of, because where people live, there is always love. I know the answers in my heart, so I'll try my best to not fall apart. And I find it hard to let go. The memories keep me together. Gotta fight till the end, no pressure, no pressure. And I find it hard to say no to the ones who want something better, to the ones who now say never. Will you be my pleasure?
CNBC.com.
Welcome back. I'm Pippa Stevens with your CNBC News Update. The search resumed early this morning for the 6 construction workers still missing after the Francis Scott Key Bridge collapsed just before 1:30 Tuesday morning. Meanwhile, the National Transport Safety Board chief plans to go aboard the cargo ship with a team of investigators today as part of their probe into the disaster. In Georgia, lawyers for the 3 white men convicted in the 2020 killing of Ahmaud Arbery are in court today. They're asking a judge to throw out their hate crime convictions. They argue the past evidence of the men's racist comments didn't prove a racist intent to harm Arbery. They were convicted for chasing the 25-year-old through a neighborhood with pickup trucks before one of them shot and killed him. And famed American artist Richard Serra died from pneumonia at his home on Long Island Tuesday. Serra, one of his generation's preeminent sculptors, was known for turning curving walls of rusting steel and other materials into large-scale pieces that are dotted around the world. He was 85 years old. Carl?
Legacy. Thanks so much. Meantime, a sharp uptick in data center demand causing a strain on the country's power grid, and energy and utility suppliers looking to capitalize. Our next guest says its assets are already positioned to meet demand. EQT, one of the largest suppliers of nat gas in the U.S., and its CEO, Toby Rice, joins us this morning. Toby, great to have you back. Good morning.
Good morning, Carl.
A lot written just this week about how finding fresh energy is the #1 obsession of big tech. These 5-year demand projections doubling in a year. Is there a grid crisis in this country?
Well, this is something that has caused people concerns looking at the energy security of our grid. This happened even before the new demand catalyst from AI. And, you know, when you look at some of the issues that we face with Texas, one of the root causes that the grid security that we do have is completely dependent on intermittent sources like renewables. So this is what happens when you rip out reliable electricity sources like coal and nuclear, and you prevent even more reliable energy sources like natural gas from playing a bigger part of the mix. This is the state of the grid right now, and it's something that needs to correct if we want to fuel the biggest technological boom that's coming with AI.
Do you think the U.S. has been delinquent in energy production because no country has ever produced as much as the U.S. is producing right now?
Carl, this is a talking point that you hear in D.C. because we will be telling you that infrastructure has been blocked, challenged, and opposed. And a data point here is looking at the amount of pipelines that we built in this country. We built fewer pipelines last year on an annual basis that we had done in the prior 30 years. Well, people will say it can't be that bad because we are producing record amounts of oil and gas production. The industry is doing pretty good. Well, the question you need to ask yourself is look at the world around you. Rampant inflation, war in Ukraine, emissions are skyrocketing, energy security crippled, energy poverty now increasing. The question we should be asking is the industry doing enough? And clearly, we need to be doing a whole heck of a lot more. The good news is we have the resources here in America. This is what's made America the energy powerhouse in the world. And we are throttled back. If we unleash American energy, we can create a whole lot more good, lowering global emissions, providing energy security to our allies and ourselves, and also powering this new technological boom that's coming.
Are you alluding to criticism that you have about the president's recent pause on natural gas exports?
The president's new LNG pause is just another example of the punitive actions that this industry is faced with. Punitive executive orders, punitive regulations, punitive interpretations by agencies. And you can look at the reaction that people are having. Look at this LNG pause. There's a reason why the administration wants to put this in the rearview mirror as fast as possible, is because these decisions are unpopular. You look at the leaders and you look at the bipartisan pushback that's taken place criticizing this LNG pause, but look at what the people are saying, because people say this is driven by politics. In Pennsylvania, there was a poll that took place a couple weeks ago, and they asked Pennsylvanians, would you fire Biden based on his decision to do this LNG pause, or would you re-elect him? And by a factor of 2 to 1, Pennsylvania voters said that they would fire Biden based on his decision to pause LNG, because when you pause LNG, you pause our environmental progress, you pause our ability to provide energy security to Americans, and you pause our ability to keep energy prices low for Americans.
So I'm really interested, Toby, on how plentiful you think the supply is over the next decade or two, if all the necessary infrastructure is built. I mean, infrastructure domestically in pipelines is one thing, as Sarah's alluding to as well. Export terminals for Europe, who would have voracious demand, I think, given recent events, if the supply could reach them. Is there enough supply here to feed all of those things that's being untapped at the moment?
Yes, we've done the work. Thanks to the shale revolution, which has transformed America from being energy dependent less than 20 years ago to being an energy powerhouse in the world, which is an amazing feat, shows you the power of what this industry has been able to innovate and uncover. We've done the work. We have the ability and the resource in this country to quadruple our LNG exports, which would translate to an incremental almost 60 BCF a day of surplus energy that we can create here to be used for LNG or AI. It's a tremendous resource. And to put this into perspective, how big a deal this is, 60 BCF a day does not mean a lot to the normal person. 60 BCF a day is the energy equivalent of adding 10 million barrels a day of clean energy to the world stage. That's like adding a Saudi Arabia worth of energy that's going to be a decarbonizing force and continue to drive American influence around the world.
Not totally clean, I guess. Less dirty energy, perhaps, is a more accurate way of framing it. I'm interested on what you think about gas prices overall. Amazing to see below $2 on the screen that we're looking at when I come from Europe, and the price is just many, many multiples higher. If and when the infrastructure is there for exports to Europe, will those prices finally close up, and will it be, with much more supply coming online as well here, will it be European prices coming down or Henry Hub appreciating?
Yeah, I think we need to address the concept of maybe less dirty than other forms of energy. Let's just put this in perspective. When we're talking about how much natural gas demand is needed for this world, if you care about emissions, it would take an incremental 170 BCF a day of natural gas to replace foreign coal. And if you care about social progress and environmental justice, it would require another 120 BCF a day of natural gas to replace the billions of people that are using biomass as their primary source of energy. So this is something that is going to be a major decarbonizing force and something we should lean into. As far as pricing is concerned, this is probably the most important part of the conversation. When we look at energy transition plans, one of the reasons why they're failing is they need to be able to be energy transition plans that are good for the people, good for the planet, and good for profits. We can put this natural gas on the doorstep of Europe for a cost of less than $12, and that would imply a $4 gas price here in the United States. That's assuming we can get the infrastructure built to make that happen. Good for the people because $12 energy is natural gas is the energy equivalent of around $70 oil. You can build some great economies on $70 oil. $4 gas price here in America is the energy equivalent of $24 oil, and Americans would be excited about that pricing because average natural gas price over the last 20 years has been $4.50. So we have an opportunity not only to help people, but to help the planet because this natural gas will be a decarbonizing force. As I mentioned, this is the biggest green initiative on the planet that the United States has within its control. And at those price levels, our industry can generate modest returns, which means this plan is good for people, good for the planet, and it's good for profits of the businesses like EQT that will be bringing these great solutions to the world.
Yeah, as we see nat gas now, 171, pretty incredible. Toby, great to get your take. We'll talk more about the grid next time. Toby Rice joining us from EQT.
Thanks a lot.
Sticking with the AI theme, our Christina Partsenevelos is down in Austin, Texas today, taking a look at how big tech is looking to unlock AI's next horizon. Christina.
And that would be custom silicon chips. And that's because you've got short supply, high costs that have, anywhere from Amazon, Meta, Google, Microsoft, even maybe OpenAI trying to create their chips in-house, which is why I came to AWS's Annapurna Labs to see what guys like this you're building what? Programming. Oh, programming the hardware. It's something important. That's all we need to know. But they've been working on chips for over 11 years to not only compete with the chip makers out there, but also drop the reliance on companies like NVIDIA. And it's not just AWS. Google is doing the same. They have their own TPU, tensor processing unit, and it's actually gaining in popularity. Listen in.
They're seeing tremendous interest and demand from our customers. We're also using them significantly internally for in-house machine learning workloads. So for example, the Gemini models that we've recently announced were all trained and are being served on TPUs.
So it's interesting that they're using their own proprietary chips. NVIDIA, though, is making the competition fierce because they're planning on launching new chips almost every single 12 months. AMD is going to follow suit. But it is not easy for mega cap tech companies to compete. And I say that because just very recently, about 6 researchers from universities around the globe discovered a security flaw in Apple's custom chips, the M1, M2, M3. And Microsoft, for example, has been working for years on its AI chip and only recently announced it to the public. We still don't know the specs on that. AWS and Google tell me that it's about providing their customers with the best option, but a lot of it has to do with steering their own destiny so they're not as reliant on certain chip companies like NVIDIA, AMD, and Intel. Back to you guys.
Great stuff. Lovely to see you. Christina Partsinevelos there for us. Well, still to come here on Squawk on the Street, home building stocks continue to touch new highs, but can these names sustain the rally amid a tightening housing market? We're back in 3.
Got a news alert on Disney this morning. Let's get to Julia Borson on that. Hey, Julia.
Hey, Carl. Disney reached a settlement with the Central Florida Tourism Oversight District, ending all litigation between the two in state court. Disney saying, quote, this agreement opens up a new chapter of constructive engagement with the new leadership of the district and serves the interests of all parties by enabling significant continued investment in the creation of thousands of direct and indirect jobs and economic opportunity in the state. Bottom line, this means that Disney can move forward with its development of more parks and lands in Florida. It also marks a better relationship with that Tourism Oversight Board. Now, this is separate from the federal free speech lawsuit that the company brought against the governor, the free speech case over Disney's opposition to Florida's so-called Don't Say Gay bill. And all of this comes ahead of Disney's shareholder meeting, which is next Wednesday. Back over to you.
Great stuff. Thanks so much. Disney trading high at 0.8% today. Now, the spring home selling season is underway with a number of housing stocks setting all-time highs. Joining us now to discuss some of his top picks in the sector, Wedbush housing analyst Jay McCanless. Great to see you, Jay. Thanks for joining us. I was looking through your recommendations for the bigger names, KB, Lennar, Toll. It's hold, 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 hold.
It is. I'd say our concerns about mortgage rates staying high is one reason we're sidelined. And I would also say, if you look at the stock price performance in the back half of 23, they priced in a lot of good news then, which we're starting to see some good news now, but still kind of worried about where rates are going to go for the rest of the year.
So, Jay, talk to us about where you've got a couple of buys. It's more sort of specific plays. Landsea, first of all.
Sure. Landsea is a name that's trading below book, expanding into Florida and Texas, into the areas where people are moving. We like that name a lot, and they serve more of an entry-level buyer. So that's a smaller cap name that we think people should take a look at.
And so that sounds like it's a bit of a regional play as well. Talk to us about Builders First and why you like that one.
So the one thing we are positive on is we think single-family volumes, whether for sale or for rent, go up in 24 versus 23. 75% of builders' revenues come from that single-family business. We also think they're growing in repair and remodel, which is about 12-13% of their business. So we think they've got multiple avenues for growth this year, and that's the name we like the best because we do think the volume of homes, single-family homes, is going to go up in 24.
Just on your thesis, Jay, hasn't that been the mistake, though, for home builders to focus, for home builder investors to focus on high mortgage rates instead of low supply, which has really been the driver of price gains and plenty of activity for the home builders, not to mention the tremendous double-digit run-ups in the stocks? Yeah,
and you're right. It's one of those things where if the supply problems don't get better, then yeah, we're gonna look wrong for being cautious right now. But I also think that with these mortgage rates where they are, and we think the likelihood that they go down is pretty low. At some point, it feels to us like you're going to price out more buyers than are able to own a home. So that's the reason we're being cautious right now. But yeah, the lack of supply has been a tailwind for the group really since the beginning of COVID.
Jay, great stuff. Thanks so much.
Thank you.
As we had to break, check out shares of Cintas. This is the uniform company based in Cincinnati, Ohio, hitting an all-time high after the company raised its forecast on stronger demand. Lower energy prices also helping boost margins there. Shares are up 9%. This has been a long-time Kramer fave as well. We'll back in two.
Download the app.
Welcome back. Shares of Robinhood rising quite significantly. Well, it's pared back some of those gains, up 3.6%. It's on news that they're getting into the credit card space. Kate Rooney's here with us on set with more on that. Kate.
Well, great to see you. Yeah, so this is Robinhood's latest move beyond stock trading. The brokerage firm is out with its first credit card, the Robinhood Gold Card, as it's being called. It's targeted at members of its subscription product offering that has no annual fee or transaction fees. It comes with 3% cash back, 5% cash back when a cardholder books travel through its new portal, and then rewards points that can be transferred into a Robinhood brokerage account. That reward structure is better than Apple. It's better than SoFi, which had been leading in the space with 3% and 2% cash back, respectively. All of this is a result of a recent acquisition. Robinhood acquired credit card startup X1 last June. One big question, guys, how is this going to make money? CEO Vlad Tenev was asked about that on Squawk Box this morning. He said one aspect is to drive more subscribers to that gold offering. Those customers, he said, tend to be more active and spend more on the platform. They're also going to make money off of interchange, but just yesterday we did get news that Visa and MasterCard plan to lower interchange fees and then cap those rates. That could potentially crimp upside for a lot of the other fintechs out there as well. There's consumer credit risk in all of this. The launch comes at a time when delinquency rates are ticking up.
So this, I have to say, strikes me as not just a bad idea, but a desperate idea to drive subscribers. I mean, it's such a different business model to what they do. I mean, even when a bank like Goldman Sachs gets into credit cards, they can screw it up. I mean, Robinhood hasn't got any of that background. And will it really drive subscribers to Robinhood? If you're framing this as a high-end rival to the Sapphire, the people that use that, they're not going to trade on Robinhood. They're going to trade somewhere else.
So Marcus is a great cautionary tale. You'd wonder if Robinhood has the experience. They've claimed that they've hired people. I would say one thing about Robinhood, though, is they have specialized in the consumer, in that app experience. So they've got the chops when it comes to consumer offerings. It might not be credit, so that's a big outstanding question, but they have excelled at getting people to use the app and drive usership at least. At least on in terms of what you asked about the... What was your second question?
Well, I didn't really throw your question.
But you made a good point that I wanted to...
Whether it drives the subscriber growth significantly?
Okay, that's what we're talking about. They have actually tried to steal market share from American Express, and you've seen it with the transfer amounts in have actually been higher. It's about $100,000 on average. So they're trying to take market share from the Charles Schwabs of the world and graduate beyond kind of being a couple $100 in your brokerage account. They're really going at the American Express customer here. But again, a big open question if that's successful.
Karen, great stuff. Thank you.
Well, thanks.
Coming up, CEO Carnival's going to join us. Don't go anywhere. Wednesday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen, live at Post 9 of the New York Stock Exchange. Today, stocks try to bounce back following a 3-day losing streak. Morgan Stanley calling for 100 basis points of rate cuts beginning in June. Portfolio manager Sherry Paul, one of Forbes' top women wealth advisors, joins us.
Then the CEO of Carnival Cruise Lines on the back of results. The stock the worst performer now on the S&P as the company warns that the Baltimore Bridge collapse will hit the bottom line.
Tesla losing nearly 30% of its value this year, but Canaccord views much of the negativity currently surrounding the name as extreme. The analyst behind that call will join us this hour.
Right now in stocks, it's mostly rally mode. S&P is up 1/3%. The Nasdaq is lagging today. Nasdaq comp was negative part of the morning. It's pretty much unchanged. That's because communication services and information technology are the two underperforming sectors right now. What's leading the market? Real estate, stocks up 1.5%. Utilities, industrial, so cyclical names are working, defensive names are working, not so much the tech names, and that's why Nasdaq's lagging. Nvidia, Meta, Netflix, AMD, they're all lower despite Apple's strength today and strength in, for instance, Intel as well. The recent rally raising the question, is the continued strength in the market a sign of future strength? Are we now vulnerable to a pullback? Let's bring in CNBC senior markets commentator Mike Santoli for a real-time indication, Mike, on the sustainability of the rally.
Yeah, I mean, it's been a similar story, Sarah, for a little while, which is, we've had this persistent rally, 100-some days, no 2% pullbacks, really no quit. We've rotated instead of pullback across the board. The action you just mentioned there shows us quarter end, the market sort of just churning around and reshuffling the deck. You're selling the winners a little bit. It's maintenance selling. It's not motivated selling. So NVIDIA, Supermicro, Meta, Deckers Outdoor, they're all leaders to the downside. Guess what? They're some of the biggest year-to-date winners. Similarly, you're seeing some of the, alternative energy like First Solar stuff get bid today. So what that tells me is it's really just portfolio rejiggering. It's not really macro-driven. And the other piece of it is we've had some weak closes the last 4 days. You've seen intraday highs not hold for a few days in a row. It seems like the top is spinning a little slowly right now in the markets, but we've had this before where the market just sort of pauses and treads water for a little while, takes a rest, and then it proves that it was, guess what, just a disco nap, and it goes to party on again. So I don't think it's an easy call. I really don't, but I think you shouldn't be surprised if we find a reason to have a real wobble here, whether it's tax payments, whether it's quarter-end stuff or not.
Right. Are you referring to the Goldman note about pensions maybe rebalancing in a couple days, Mike?
Not specifically that.
We could be forming a little bear flag here on SPY. Poll, little flag forming here. Keep an eye on that.
That doesn't happen at a moment. That's probably been going on that's what we're seeing here in terms of the market being just a little bit flattish over the last several days. So I don't know that that's going to be the decisive driver, but it's part of the mix. And I think it just reflects the fact that there's not a lot of investors at this point who really need to buy urgently to top up their equity exposures. They're just kind of along for the ride. You do tend to see these rallies lead to higher index prices 6-12 months out. Sometimes you have to deal with a little chop in the interim.
Good setup, Mike. Talking a little bit, Mike Santoli kicking off the hour.
Disco nap.
When it comes to finding value in today's market, our next guest thinks the rally we've seen this year still has room to run. Bullish on healthcare, tech, and industrials, telling clients to invest in themes that can withstand some of the political uncertainty we may get in the months ahead. Joining us here at Post 9, Sherry Paul, Managing Director for Morgan Stanley Private Wealth. Good to see you. Welcome back.
Thank you.
When do you think political volatility begins?
Well, I think it began last year. We've got a few hot wars around the world, so we have geopolitical volatility. And now as we move
Probably have a
toward the
little bear flag
presidential
forming
election,
here on
we're
the SPY on the
investors
30-minute
to
chart.
separate their political views from these investment themes that are enduring, agnostic of who wins the White House.
Although things like tariff, trade policy are real things that affect earnings.
They
right?
are, but you know what? That can get kicked a few years down the road. And so if you find yourself in a political paralysis today for something that might happen 24 months from now, you might find yourself in the chair that people were in 2 years ago when they went to cash at the bottom of the market in favor of 5% money market rates, and now they're finding themselves mentally in the woulda, shoulda, coulda portfolio that they could have had, and are now wondering how to correct that in today's market in the current opportunity set.
What would you tell clients if we are vulnerable to a pullback here?
Yeah.
You clearly expect the market continue to rise. Should they reallocate? Should they switch exposures the next time they get a chance?
Yeah, absolutely. So, step one, a pullback is not a catastrophic event. It's actually normalized market behavior. We typically get a 0 to minus 10% pullback 3 to 4 times a year in markets that end positive. So that's step one. Step two is a correction's north of 10%. So we're really educating clients between the difference between the two. All right. And either way, in the market that we're in right now, the way to prepare for that is just to know what your balance sheet is, to know what your cash flow needs are. For most individual investors who are trying to help on shows like this make smart money decisions, 8 to 10 months worth of money in the bank, and then understand what your time horizon is from a goals-based investing standpoint on how you're trying to grow your money for very specific things. And that's how most Americans live in their money. So that's my advice and guidance to them.
How much exposure should you have to the Magnificent Seven?
Well, so great question. In a portfolio setup right now, I think it's important for people to be equal weight instead of market cap weighted. So if you're an investor using exchange traded funds, you definitely want to move out of the market cap weighted into equal weighted. And from a percentage basis, it just depends on what your personal objectives are, right? Because these are highly volatile stocks that add bounce house to a portfolio, which is different than something being a bad investment. Okay, and a lot of investors will mistake the two. That if a stock is fluctuating, it means that something's wrong. When actually that's a normal course of business. And so, most investors in our portfolios, we have got exposure, across the board. We're overweighting and underweighting to your earlier point, depending on a client's risk tolerance, across tech, healthcare, industrials, and even in some of the defensive plays for clients that are worried about recession. You tilt those towards income and defensive as a way of organizing a portfolio set. The bottom line is there's a right portfolio for every client if they can define their risk tolerance.
Right. Not everybody can.
Right.
There's a couple notes on the street today arguing for small and mid caps.
Yeah.
Or at least saying that the underperformance is a little bit long in the tooth. Do you have to be hyper bullish on the macro to want to go there?
Well, you have to. I mean, obviously, the underpinning of a small cap trade is a rate cut theme, which is, still a little bit of a jump ball. And so it makes what we're doing in client portfolios is we're slowly weighting into small cap purely on a value trade. But, too much of a good thing could be a bad thing. So I wouldn't go into overweighting. We're still very U.S. large cap centric.
Does that mean that large cap trades are no longer reliant on rate trajectories?
Well, it's a mixed composition of amazing things happening for big corporate America, right? So we've got big cash balance sheets that can be deployed in share buybacks, dividend increases, which is amazing, and even acquisition. We've got the installation of AI, which we've talked about at length. We did this in January, which is the cost-saving, productivity-enhancing aspect to this very unique bull market cycle, which benefits large corporations. And then we have, we're coming out of earnings where we saw earnings actually go up, not down this last quarter. So that all bodes well for big cap U.S. And they can insulate themselves in so many ways from the geopolitical supply chain impact that may force them to rethink how they're building out their manufacturing supply chains.
So that would be your preference?
Absolutely, yeah.
Do you still get questions about recession from clients? Because we did this Delivering Alpha survey at CNBC with CIOs and about 300 money managers, and many of them still expect recession. They're just kicking it down the road to 2025.
Yeah.
So what do you tell your clients on that front and how to prepare?
Great question. We tell clients, instead of trying to time the recession, always prepare for the inevitability of one, because it's a part of economic contraction and expansion. Recessions are not catastrophic events. And so much of investor psychology of the last 25 years, unfortunately, is anchored to that, because all of the U.S. major recessions, uniquely in the last 2 decades, were caused through traumatic events, not just sort of organic resets and economic cycles. And so while we may, kind of kiss into a recession, there's an easy way to prepare for that in a portfolio.
Not catastrophic, but would mark significant deterioration in earnings growth.
It would, and so what you want to do is tilt your portfolio towards fixed income in both the short and intermediate duration, because if we're in a recession, then we would likely see accelerated rate cuts, so you'd benefit in your bond side. You want to pivot into staples, utilities, and healthcare. boosting your dividends, and then own some percentage or margin of those growth kickers that we talked about that maybe have higher valuations, but you really should be adding that steam to your portfolio.
Finally, I was just thinking about the House View, Mike Wilson's note over the weekend, just looking at efficiency gains, the outlook for higher margins, and the outlook for upward earnings revisions.
Yo, thanks for hanging with us. It's 8:11 on the West Coast. I am Shimano Trader. This is The Spread. We are a live trading show. Please don't forget to subscribe to our channel here on Tradecaster or on YouTube. Thanks for hanging with us today. Appreciate you being here.
Installed in business frameworks that already have proof of concept, just making them more efficient. It's a far more stable moment of innovation and a growth opportunity, and I can't, like, especially for younger generation, I can't make a stronger appeal that they should be investing in this market.
Sounding like Larry Fink in his shareholder letter this week. That's good stuff, Sherry. Thank you. Good to see you.
You too. Thank you.
The CEO of Carnival Cruise Line with us next on earnings and the impact of the collapse of the Baltimore Bridge. What will that mean for its routes?
Watching Wells Fargo today after a 50% run-up over the last year. KBW calling the top, downgrading to market perform, says the sector is set for a consolidation phase given expectations for net interest income to underperform peers. Shares still eking out a modest gain here as the Dow's up 230. Stay with us.
Yo, we have a potential bear flag forming here on the SPY. Puts are in play. Not financial advice, not a recommendation. You will lose money. Not the best day for semis, but Marvell Tech today. Citi opens a positive catalyst watch on the stock, bullish ahead of the AI event on April 11. Shares already up 20% plus year to date, and today another 5.
When we come back, the Japanese yen hitting a 34-year low overnight. More on what that means potentially for the U.S. Treasury market.
Watching extreme volatility in some new public companies like Reddit and DJT. The similarities and differences to GameStop and that meme trade from a couple of years ago. Meanwhile, the Carnival CEO is with us next. Stay with us.
In 1919, activists worldwide urged their governments to create policies to help working mothers. Today, half of public companies in the U.S. offer paid parental leave for primary caregivers, and 49% offer some leave for secondary caregivers, enabling partners to actively share childcare responsibilities. Celebrating Women's History Month, I'm Julia Borston. Carnival, a mover today, reporting a narrower than expected loss per share in Q1, with revenue coming in just under the consensus. The company also commenting on disruption stemming from yesterday's bridge collapse in Baltimore, which is a big U.S. port for Carnival Cruises, forecasting an impact of up to $10 million on both adjusted EBITDA and net income for 2024. Let's bring in Carnival CEO Josh Weinstein to discuss all of this. Josh, welcome back. Good to have you.
Hi, Sarah. Nice to be with you.
It's good you were able to quantify for investors the impact here, but can you just spell out a little bit more about how the bridge collapse will affect your operations, how much you've got going on in that port, how easy it is to reroute?
Sure. Well, first and foremost, our sympathy goes out to those who lost their lives and their loved ones, and they're in our hearts and our prayers. With respect to our operations, the good news from that perspective is we're going to be able to proceed pretty much without a beat. We can shift our home port operation for the one ship that we've got there year-round from Baltimore to Norfolk, but really that's temporary. We can't wait to get back to Baltimore. That is a longstanding home of ours. And we do know that the president yesterday talked about how important it was to all the United States to get that channel cleared and that port open. So we're ready, willing, and able to go back as soon as we can.
So you have 2 ships that sail out of the Baltimore cruise port?
We basically have one ship all year. The ship switches between the year, but it's basically one ship over the course of the year.
Got
on an ongoing basis.
So you're able to reroute that pretty easily. What about
We can.
just while we're on the topic of supply, and I definitely want to ask about earnings, but I am curious about security concerns in the Red Sea and whether that's had an impact or has died down.
Well, it certainly had an impact on our outlook from December. As a matter of fact, we quantified it for people today. Probably about $130 million impact on the business. The good news from our perspective is 2 things. Number one, our business is so strong versus what our expectations were in December that we were able to cover the impact of that and more and raise our revenue and full year guidance. The other is our ships are mobile. And so we have the ability to adjust and reroute. And so rather than taking our ships through the Red Sea to get back from world cruises, repositioning cruises, we have other alternatives and we can lean into that. And that's a real strength of our company and the industry.
Yeah, I mean, you mentioned the raised guidance despite some of these disruptions and challenges you're dealing with. Any sign of slowing demand, or it just continues to power ahead?
You know, you probably think I'm a broken record, Sarah, because I've been doing this several quarters in a row, and it's another quarter of record yields, record per diems, record bookings. So again, the bookings part is not about today, it's about tomorrow, and we have no signs of slowdown. We just entered 2024, the highest books in our history, and we just took another quarter of record bookings that goes out beyond 2024 into 2025. So as stellar as this year is going to be, not only in the ticket, but onboard spending, we see even more strength as we look forward. It has not slowed down. People understand the value of cruising, the experiences that you get on cruising versus the price and experience of land-based alternatives. It's not even close, and people really recognize that.
So Josh, then what goes through your mind when you hear from companies that are largely in the packaged food, the restaurant business that refer to a stretched consumer? Does that make any sense to you?
Yeah, sure it does. I mean, you know, I go to the grocery store, I see what people are faced with, but this is one of the strengths of the industry again. Because we are a value play, we can stack up against other alternatives, and if people are really stretched, they will still take their vacations. And when they want their dollar or their euro or their pound to go further, and they really line up a cruise versus another alternative, they will get so much more experience for their money that means we can hold price, maybe even take it up over time in times that are troubling because of that gap to land.
What is the gap? What should the discount be for cruise? How do you quantify the value, and how do you adjust pricing given the demand that you have right now to keep that?
Well, there are a lot of questions there. So let me start by saying we should have a premium to land, right? That is the bottom line because of what we offer. Now, you know, Goldman Sachs did a study a couple of weeks ago that came out, and they said the value, the price differential between cruise and land, somewhere around 30%. Now, that's a huge amount of headroom for us to continue to raise pricing and make improvement and still be of value to land. And I tell you what, I'd love to use it as a sword and a shield, so I'd be happy with that approach. We can close that gap and still be of value.
It's kind of ironic, Josh, when you think about the fact that just a few years ago, we went through this period of traumatic concern about virus transmission, really, where you would ostensibly want to be somewhere like land, and yet it's almost turned the industry upside down. I just wonder if there are protocols that have made those concerns go away, or is business being done any differently now than it was pre-COVID? I imagine it has.
Well, I think we continue to just get better at everything we do. I think also people understand the pause in our cruise operations happened and COVID moved on. We weren't the cause, we weren't the source. We have great operations, safety, health, environment, security. Those are our top priorities, and our guests know that. And so as soon as we got over the myths of that, people leaned once more into what we have to offer, and we've got records. We carried over 12 million guests last year. We have more newcomers in the first quarter of this year, 30% more new to cruise this quarter than just a year ago. So the word is out, people are sailing, and they're loving it.
So they're booking more. Are they spending as much on board cruises?
They're spending more. So when we updated our guidance just this morning, we talked about the fact that the onboard spend profile over an incredibly strong 2023 is higher. So we're not seeing concerns. As a matter of fact, it's the opposite. We're seeing strength in the two things that are the most applicable to us having the pulse on what the consumer is thinking, which is the immediate onboard spending and the amount that they are doing in bookings for the future.
Josh, if all this is true, why isn't the industry getting even more aggressive on new capacity and putting pedal to the metal?
Well, from my perspective, new ships are great, but improving demand and putting it onto the supply that we have allows us to raise pricing. So we have a growth plan that will give us moderate growth over the next 5-10 years. But the key thing for us as a company is our profile over the next 5 years is the lowest on record. And what that does is it gives us the opportunity to use all the cash generation that we've got inherent in our business and pay down debt. Because our capital structure, priority number one, is strengthen the balance sheet, reduce our debt, get back to investment-grade credit ratings so that we can withstand whatever comes our way.
But you did recently order 2 new ships, right? One order placed more recently. Talk a little bit about how you're thinking through that and where it's being made, where they're being assembled.
Sure. So our order book, we've got one more new build coming this year for Cunard, the 4th Queen, first in 14 years. We've got only 1 ship in 25, none in 26, and then we just placed an order for 2 Carnival Cruise Line ships. America's Cruise Line, they truly do need that capacity growth because they are bursting at the seams. But I'll tell you, it's all in the context of what I've been laying out for almost 2 years now, which is moderate capacity growth. 1 to 2 ships a year. We're going to funnel that and allocate our capital to the brands that are truly outperforming and need that capacity to really drive further. And as far as where they're made, it's Europe. It's in Germany, it's in Italy, it's in Finland, it's in France. Those are the master craftsmen.
You get more aggressive on marketing, or is demand and pricing so strong that you don't need to do as much?
Well, we're being consistent to what we said. We haven't changed our marketing plans for 2024. We were significantly underinvested pre-pause. And what we have done is simply normalized. And by doing that, I think we've given our brands a real chance to shine and show how world-class they are in their markets.
Finally, Josh, what's the state of the Chinese cruising market and how fast it's been able to come back online given some of the COVID restrictions and the weaker economic growth than expected?
Sure. China as a cruise market really has been the last to restart. They are restarting. They're actually opening up to international cruise companies probably just about a month from now. And we encourage that. We think that's great for the industry. We, Carnival Corporation, we've pivoted and we've moved our tonnage and moved our assets to other places and other brands, as a matter of fact, within our portfolio. So we have no plans to go back to China at this point. We're going to watch, we're going to wait, we're going to observe, and if opportunity is there and we think it's the right thing in the future, we'll participate. But right now, we're having trouble satisfying the demand outside of China, and that's where we're focused.
All right, Josh, thank you so much for all the color. By the way, the stock has erased all of its losses now through that interview. Very bullish sounding Josh Weinstein, CEO of Carnival. Appreciate it.
Thanks, Sarah. Thanks, Carl. Take care.
Time for the story abroad. European markets closing the day mixed as the upward momentum seems to be taking a break. Investors watching some bullish data with EU economic sentiment moving higher. Manufacturing and retail were bright spots while construction remained weak. But the overseas story today has to be the Japanese yen, falling to a 34-year low against the U.S. dollar. The greenback dollar now up more than 7% against the yen this quarter, its best quarter since Q2 of 2023. Today, Japan's finance minister saying, quote, "We are watching market moves with a high sense of urgency. We will take bold measures against excessive moves without ruling out any options." threatening intervention there. The Nikkei did end the day higher by nearly 1%. Remember, the BOJ ended 8 years of negative interest rates just last week, aiming to now fight the inflation, or at least get out of the accommodative space, since they're seeing inflation. And I think now the currency market is on guard for some move from the Bank of Japan to step in. They've done a number of interventions in the past. Some have been more successful than others, but so far the threatening of it appears to be working right now.
Yeah, 152 is a big number. Meantime, a couple hours into the trade, tech definitely not leading today. Let's get post to post with Bob Pisani. Hey, Bob.
Still on the upside. Remember, we have a day and a half left at the end of the quarter. Comment a lot about what's going on the quarter. I just want to show you some momentum names here. First, signs of life in the IPO market. Reddit's taken a pause today. It's had a great run. Remember, priced $38 5 days ago, went as high as $74 yesterday. It's been very volatile here. Remember, Reddit, Trump Media, GameStop, they're the high retail base. That's the thing they have in common. Retail investors tend to be less interested in maybe fundamentals and more interested in the emotions around owning the company. But a great run and a good sign for the IPO community down today. There's been some great momentum with industrial names. The advanced decline line has been very strong in the S&P 500. Another new high. I've been mentioning some of these big industrials, Textron. Remember, so this is very good name. You're talking about Beechcraft and Cessna and Bell Helicopters. This is an historic high. It's had a great run. March has been very good for industrials in general. This is up about 20% or so far this year. Another group, it's starting to look a little tired. Energy's been a real leader in this quarter. So here's Marathon Oil. So Marathon Oil is the exploration and production company, as opposed to Marathon Petroleum. That is the company that does the refining here. So the important thing is oil's been creeping up. This month was 77 earlier. Now it's 82 or so. That's been the big mover here. 24. Now look here, 27. So you're up 12% in a month or so here. That's certainly a good sign. Same thing with and they had very good earnings at the end of February. Marathon Petroleum, this is the refiner now. The refiners have been great. Valero's been great here. Marathon was, what, 175 or so at the start of the month, 196. Those are big moves here for these companies. But you see it's down. They're starting to run out of steam. But given the move, that's not surprisingly. Here's another big E&P producer, Conoco. What was it, 110 or 111 in early March, something around that. Look, now 125. That's been strong. So there's a group that's had a great month and is starting to run out of steam. Banks have been mostly sideways on the month. There's a few small breakouts, though. Citigroup, all of a sudden here, Citigroup up the whole bunch the last several days. We got a new 2-year high now. It was, I don't know, I forget, 54, 55 at the start of the month, now 61. This is a bit of an anomaly in the banking groups. Most of the, particularly regional banks, have been all sideways for the last couple months. Sarah will have a lot more to say about end of the quarter movement in the next day or so. Back to you.
Yeah, they've been doing that restructuring, going through their final period here of layoffs. Thank you very much, Bob Pisani. Time now for a news update. Pippa Stevens has that for us. Hi, Pippa.
Hey, Sarah. Hunter Biden is expected to ask a judge to dismiss the tax charges against him filed last year. The president's son plans to argue the case is politically motivated. He alleged prosecutors caved to pressure from Republican lawmakers who launched an impeachment inquiry into his father after a plea deal fell through. Biden is accused of scheming to avoid paying $1.4 million in taxes. The Maryland State Senate is drafting an emergency bill to provide income for the roughly 15,000 workers at the Port of Baltimore. The port is closed indefinitely right now following Tuesday's morning's collapse of the Francis Scott Key Bridge. It's an important hub for auto cargo and coal exports. And 7 of the country's largest gaming companies are joining forces to promote responsible play and share information about problem gamblers. The members, which include FanDuel, DraftKings, and Fanatics, account for 85% of the online betting market in the U.S. They will create an independent database that will allow them to share key information related to consumer protection. Carl?
Yeah, but thanks so much. When we come back, several Tesla price targets to get to this morning. Canaccord lowering its delivery estimates, but they say the negative sentiment around the name may be overdone for now. The analyst behind that call is going to join us next.
a trial.
Bold call from Evercore this morning on Western Digital, initiating an outperform on the name, saying the stock is, quote, uniquely positioned to deliver on earnings and also become a less complicated growth story following the split of its hard disk drive and NAND memory businesses. Price target there up to 80. Stock lower today, but still at its highest level since January 2022.
Meantime, turning to Tesla this morning, some bearish sentiment this week at Citi, at Bernstein, at Redburn, all cut their price targets on the name. Mizuho downgraded to neutral, but Canaccord Genuity says it's not that bad, calling the negativity surrounding Tesla right now extreme. Joining us this morning, Canaccord Genuity Managing Director Georgia Giannakrikis. George, it's good to have you. Welcome back. We have seen a lot of numbers get cut. Redburn today suggested maybe flat to negative deliveries this year. Why can't it get suppressed below 170?
Look, thank you for having me on. We went through multiple geographies during the quarter, tried to discern how bad demand was, how good demand was, and clearly things aren't perfect for Tesla. There's some weakness in China in March, but I think the one thing people have to appreciate is that much of the potential weakness in deliveries this quarter has to do with supply constraints. They've had some issues with making a new updated Model 3 in Fremont. And don't forget that the Cybertruck isn't fully ramped yet. We assume that maybe they'll make 5,000 and deliver 5,000 in Q1. And they have the capacity to deliver over 60,000 a quarter. So things aren't that bad. And actually, if you add those things back, it should result in year-over-year growth. So it's not perfect, but we don't think it's as bad as people think it is.
Are you a fan of the theory, and some have written this, that the price cuts have actually worked a bit?
Well, look, interesting question. They cut prices a lot last year, and clearly it helped volumes, and it's helping this year. But what's interesting, what we put in our note today, is that the price cuts haven't been there so far this quarter. I mean, maybe a little bit here, in China and in South Korea, but overwhelmingly, the tone has shifted dramatically in price cuts. This quarter in the US, they actually increased prices 4 times, with another one due on April 1st. And some people have speculated that maybe to induce demand, to get people to hurry to the website and buy a car today, but I think it's more than that. I think hopefully we'll see that result in margin improvement throughout 2024, but also it may indicate that things might not be as bad as people think.
What's happening with your China estimates, though, after Musk complained last quarter about the competition and the subsidies from competitors?
It's a great question. So look, in China, if you combine, we have data that comes out every week. It's publicly available. If you combine January and February, because there's some changes in the timing of the new year, we're actually up year over year. Where we think the weakness is probably in March. We had 3 weeks of reports. We got one yesterday, and those were down year over year. So there seems to be some slippage, and some competitors in China, NIO and Li Auto, actually pre-announced negative over the last couple of days. So China's not great, but again, they operate in multiple geographies, and there has been some pockets of goodness. Whether it's European numbers were good for the first 2 months, US is probably not that bad, and we think that demand for this new Model 3 is actually really good. It's just that they haven't been able to make as many as they hoped.
I know for Q1 deliveries, you're looking at, you've lowered to 420K, right?
Yes, correct.
You think the street's gotten conservative enough that next week might actually be all right?
Yeah, look, it's hard to discern exactly where the whisper is, but probably in the low 400 range, below the 420, and we think that's the over-under. If it's over that, we think the stock goes up. And again, what we try to do a little bit is reframe the debate. It's a little bit of supply in there too. We estimate about 95,000 units if they were at full capacity at the Cybertruck, full capacity of the new Model 3, and maybe 10,000 units out of Europe due to some fires at Giga Berlin.
Right, and I think you've still got a 2-handle on full-year deliveries, which not everybody does. Finally, do you see a lot of political risk if there's a change in the administration?
Yeah, I mean, look, they do. Those EV subsidies do help Tesla. We think that the majority of people who buy a Tesla today are being helped by a $7,500 tax credit. That could change. We'll see if there's a new administration, and there's clearly some risk to that. But we think that over time, the inevitable shift to EVs is going to happen, and Tesla will be a leader. So there may be some bumpiness, but if you look, a little duration, they should be a winner long term.
Yeah, and this charging partnership getting some write-ups today as well. George, it's a really interesting story right now. Appreciate your help. Thanks.
Thanks for having me.
Up next, meme-like volatility returning to some parts of the market. We're going to look at the moves in names like Reddit and Trump Media when Money Movers returns.
What's up, traders? Happy hump day. It is 8:47 on the West Coast. We're about to get off air. Thank you for joining us today. Don't forget to subscribe to our show and come hang out with us again on Friday. Oh shit, the market's closed on Friday, so maybe we'll stream tomorrow. So come hang out with us tomorrow. Please subscribe to the show. Have any comments, questions, or concerns? Put it in the chat. Just subscribe to the channel. We'll be back on here last few minutes. Again, thanks for hanging out with the spread. Thanks so much.
There might be a new meme stock on the block. Shares of Trump Media, DJT, up 40% in the first day of trading, surging again today. Our Deirdre Bosa taking a look at the new wave of meme stocks in today's Tech Check. Morning, Deirdre.
Good morning. That's right. So this new class has arrived. We don't know how long it's going to last, but the most divorced from fundamentals has got to be by a long shot DJT. Trump Media and Technology Group closed yesterday at a market cap of nearly $8 billion, up another nearly 20% today. There's newly public Reddit as well, up nearly 70% from its IPO price, but volatile, as meme stocks are, down 12% today. But as a whole, those two stocks really underscore a market that is increasingly driven by momentum and retail investors. Like the last meme stock wave of 2021, though, buyers beware. Reddit's price to sales multiple is now higher than that of other more profitable social media names, Meta, Snap, Pinterest. And at the same time, it hasn't gotten so out of hand that it has surpassed NVIDIA, which I'm just showing here as a benchmark for a momentum stock that is driven by fundamentals. Not calling it a meme stock by any means. Now look at what happens when you add DJT to the mix. This is a very unique meme stock. So this next screen, you're seeing that it has just $3.4 million in sales for the first 9 months of the year, giving it a price to sales multiple of more than 2,000 times. So that obviously blows the others out of the water, even NVIDIA. You can barely even see them in this chart. That's how kind of divorced from reality it has become. As the saying goes, those who don't learn from history are doomed to repeat it. So do just want to show you what happened to the former meme boom and bust. There's GameStop, of course, probably the most famous. At its height, it had a market cap of more than $20 billion. Today, that's less than $5 billion. BlackBerry hit some $14 billion at its peak, has fallen to less than $2 billion. Bed Bath & Beyond in 2021 saw a market cap of nearly $6.5 billion. Today, zero. It is in bankruptcy. Now, the other very important lesson from that era, though, is that it is extremely risky to bet against stocks with this kind of momentum. Investors can and have gotten short squeezed. So even though the fundamentals behind DJT do not back up that valuation, it can keep going up. Even on the Wall Street Bets subreddit, users are poking fun at its rise. One writing, Hump and Trump. Another comment reads, there are Waffle House locations with more revenue in a month than Truth Social had in an entire year. Still though, guys, it moves higher, especially as some previously buzzy trades, they begin to look a little bit tired. This may be connected. Take NVIDIA, it's up some 80% this year. We know that well. But with GTC, its big conference behind us, and no clear catalysts in the near future, retail investors, they might start shifting their attention to these new hype stocks. They could keep going higher, guys. But like we said, it's very, very difficult to call the top here when it all turns around.
Dee, what's the history like of trying to short names like this? I know you said it's usually, or can be punitive. S3's got some data on just how expensive it would be to carry a short.
Yeah, exactly. I was looking at that S3 data as well, and this is, just as important as it is to highlight the fact that these valuations are divorced from fundamentals. Just because they are doesn't mean that you can make money off them. SPAC short sellers lost nearly $160 million on paper in 2024. And now DJT is the most expensive U.S. stock to bet against. Let me give you some other stats. Over $100 million of short interest, according to S3 data. And, there's loyalty behind these names, and that can last for a very long time. I know I gave you the examples from the last boom and bust, but before that bust happened, some short sellers were caught flat-footed.
Yeah, hard to find a good analog that has quite this mix of characteristics. Pretty fascinating, Dee, and a good gut check on the name after these gains. When we come back, the results from the exclusive CNBC survey shed some light on the future of corporate tax rates when we're back in 2.
deficit.com.
Americans are split on what should happen to the corporate tax rate. A new CNBC survey revealing exactly where they stand. Our senior economics reporter Steve Leisman has those results. Hey, Steve.
Hey, Carl, yeah, this is an issue not talked about much yet in the campaign, but it's sure to be debated, and investors need to watch closely the battle over the corporate tax rate that the election could play a decisive role in figuring out. President Biden, he wants to ratchet up the tax rate to 28%, where it was before President Trump lowered it in 2017 to 21%. So what do folks think? The CNBC All-America Economic Survey showing 43% of the public want to keep it at 21% or even go lower. 45% want to restore it to 28% or go higher. So the poll's got a 3.1% plus or minus margin of error. That makes the issue a dead heat. A breakdown shows a little more intensity for higher corporate taxes. A plurality want to keep it at 21%, but 24% want to go higher. That includes especially young voters and the most liberal voters, which of course there's some overlap. While just 14%, you can see there on the left side of your screen, they want to go lower. They're the most conservative voters, offering more support to cutting below 21%. But there isn't much popular support yet for it. There have been some articles suggesting that candidate Trump may want to cut below 21%, but no public statement. The Trump campaign did not respond to a query from CNBC on the issue. Here's the party breakdown, though. 78% of Democrats and just 15% of Republicans want the corporate tax at 28% or higher. 15% of Democrats and 74% of Republicans, they want it 21 or lower. It looks like a mirror image. So where are the independents? There they are, coming right up at you. Independents lean a bit towards the Democratic side, preferring that 28% margin or higher by 45 to 36% margin. President Biden has proposed that 28% corporate tax in the budget, but not likely to go anywhere in this Congress. How this settles out is going to be determined both by the presidential election and, of course, guys, which party controls Congress in November. Carl?
Indeed, Steve. And then you had that Times piece earlier in the week that argued that the president has actually been a net cutter of taxes so far in his term.
Yeah. It's just how he wants to do it, Carl. I'm sure you read the piece. It shows that he's very specific about how he wants to do it, using these corporate taxes much more as public policy for specific issues rather than broadly across the board. It would be very interesting because this is a thing that, the President Trump is very much a populist, but unclear how lower corporate taxes, even lower than 21%, will play with lower income Americans and blue collar Americans. There's indication in our poll that lower income Americans do not support a tax rate below 21% for corporations.
Well, another related question, Steve, is how do Americans feel about the ballooning debt and deficits and the fact that our fiscal trajectory is not great? Because no politician wants to run on, it's hard for them to do austerity, but at the same time, we have this big problem.
So we asked about the importance of the deficit in our poll. It actually ranks pretty low, Sarah. Let's see, how many issues here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. About the 12th of 13 issues when we ask people what are the top 1 or 2 issues. Inflation is the top, healthcare is number 2, the needs of the middle class number 3. But the federal deficit, Sarah, is not part of the discussion right now or the buzz, and you take a coin from your next segment here, of what's going on. Not that it couldn't be, and also I think as your question suggests, Sarah, not that it shouldn't be.
Right. But it shows you where it is on the list there on priorities. Thanks, Steve. Steve Leisman.
Sure.
Well, let's do the buzz now because the street continues to buzz about Disney. We're now just 1 week out from the annual meeting and, of course, the big proxy vote. Bob Iger getting plenty of support from the likes of Jamie Dimon, his banker, George Lucas, top shareholder. Although last night, Nelson Peltz Tryon got some slight momentum with an endorsement from another advisory firm called Egan-Jones. Not the same influence as maybe Glass Lewis and ISS, which.
All right, we have a break. We have a break on the bear flag here happening. So check that out. We have this little break on the bear flag. So we should continue to see downside momentum on SPY. Puts are in play. Not financial advice. You will lose money.
On the institutional side of which way it's going to go.
And for all the back and forth, THR with a tough piece today titled Iger's Era of Invincibility is Over, that the board's really going to take a firmer stand during this second run.
And it was a good article.
Yeah.
And it got into some of the woke stuff, too, which hasn't really entered the proxy vote, but is part of the discussion.
Quarter end tomorrow. Let's get to the judge.
Hey, we're going to stay on air for a little bit longer, so you guys have any questions about what you're seeing on the screen, feel free to put it in the chat. Thanks for hanging.
5 months and counting. The debate now, how long can it last? We'll ask the investment committee that key question. Joining me for the hour today, Joe Terranova, Kerry Firestone, Sarat Sethi, and Steve Weiss. Let's check the markets because we're green. We are green today, except for the NASDAQ. It's a modest loser. A lot of talk, Joe, about whether the rally's momentum is waning as this quarter, month, and comes to an end. Our Delivering Alpha investor survey from CNBC. Do you think the market has run too far too fast? 2/3 say yes. We're in for a pullback. That's what they think. Do you?
I think everyone thinks that we've run too far too fast. I was in a Morgan Stanley complex yesterday, and all the financial advisors were talking about, well, when's the correction ultimately going to be coming? So if everyone's expecting and wanting a correction, guess what? The correction's not coming. There's an expression, never sell a quiet market. This is a remarkably quiet market. And if you want to buy insurance, Scott, go right ahead and do it. It's awfully cheap enough. The VIX is down at 13. So I wouldn't stand in front of what appears to be a very strong bullish trend.
So, Kerry, Piper Sandler today says, cool the engines, a 5 to 10% pullback could be coming. Investors aren't betting on that, right? We've been talking about money continuing to flow into stocks. Barclays today says a cash deployment is underway. The broadening's going to follow. Quote, an expected upcoming central bank easing cycle means there should be scope for equity flows to pick up and performance breadth to widen. They make the conclusion that if you put those two things together, the rally continues. Are they right or wrong?
Well, it's continuing today. And what they're talking about might be, I don't know, 3 months from now, is the rally continuing? I would say that the rally is going to go through a period of time where we're going to have these rate cuts, and the market wants rate cuts.
Hey, did you vote in this survey, by the way?
Yeah.
You did vote in the Delivering Alpha survey?
I did.
So,
don't ask me what I voted for.
I'm going to ask you right now. Sorry. I mean, what do you want me to do? Do you think the market has run too far too fast? Yes or no?
I think the market has run very far, perhaps too fast, but that doesn't mean I think it's going to go down yet. I mean, it's up 27% since the middle of October.
Okay.
Right, the S&P. But if we're going to have those rate cuts, and that's what determines whether people want to buy more stock, then you're going to get buying. What you need for the market to stop going up is some catalyst, such as NVIDIA reports a quarter that people don't like. There's going to be something significant that people start selling, and they haven't seen that yet, and they're unlikely to see that for a few months.
Sarat, were you in the 61% or the 39%? Because I know you voted too.
I did vote.
We're all coming clean on it. Wow, why is everybody so cagey?
No, I'm not cagey. I did vote. I did say it's run too fast, but what I like about this rally is that it's broadening. I mean, today the S&P's up, but NASDAQ's down. So you are seeing money flowing into commodities. You're seeing money flowing into energy, into healthcare. So all the other sectors are now getting capital, and that's healthy for the market. Now, it doesn't necessarily mean the Fab 7 are still going to go where they, to the northeast, but I do think there's opportunity there. And if we get a pullback, it'll be natural. And who knows what causes it? I mean, the whole 27% was because the Fed actually said, hey, we're going to stop. But if the Fed ever said we might raise again, there goes your, So I think you just have to understand where you're investing and be in the right places.
You got lucky. I didn't ask you directly. I'm asking you right now. Now I'm asking everybody.
I always get.
I'm going to ask the guys when I came in, how'd you vote?
39%.
39.
And I want
market's going to keep moving higher.
Correct. I want to be clear on something before you ask Steve. I only voted once. I think Steve voted more than once.
How'd you vote? Are we in for
twice?
Are you part of the 2/3 that they think we're in for a pullback or not?
I didn't vote, but I'll give you my answer now. So I
You know what, people? I've got to be honest with
Let's
you.
move on.
Some of us have actual jobs to do.
Extraordinarily
Well, some of us do, but what do you do?
Hey, I could lied about like the other three.
I feel.
I voted. He knows we voted.
Did it?
I feel stupid. I should have known that you wouldn't have voted. If only because they asked you to vote, you probably didn't turn your vote in. How would you have voted? How would you have voted?
I voted. It's gone too far too fast, but it doesn't. I don't know what to do with that information in terms of portfolio management. Sure, there are some positions that may be overvalued, may have gotten too big, such as I have a few of those. that you cut back from portfolio management. But I don't think it means you exit positions that still have good fundamental underpinnings, and the price may be slightly ahead of the fundamentals from a time standpoint. So, yeah, I mean, look, these market moves aren't natural to have this kind of movement in such a compressed period of time. But I'll tell you what, if you take a look to Sarat's point, and it's not just today, you take a look at some of the aerospace names, defense names, like TransDigm, TTG, or Textron, or Leidos. They've all outperformed the NASDAQ and the S&P. I mean, they're up 20%. So that's the real outperformance that we've seen in the other names. So if you keep focusing on the mega caps and say it's going too far too fast, I think those stocks may have gone too far too fast, and I own them, but I'm not doing anything about it because the fundamentals are there.
People who voted in the survey that this is the top sectors for 2024 will be number one, almost 2/3 tech. So we may think, some of you may think that sector's moved too far too fast. Obviously, people aren't willing to give up the ship yet, and they think that this is the place to be, that the trend is obvious, and that it's not going to reverse in a meaningful way anytime soon.
Well, I'm hoping that we're including comm services in that tech 61%.
Well, I think we are because
I think we are.
When we ask the next question, where do you stand on investing in AI? Well, they say it's best to do it through the Qs. That was the winner. Yeah. So you go broad. But then the second one was buy Nvidia.
Because
we know what stocks sort of fluctuate between the two. Meta, comm services.
Yeah, I like comm services. I think comm services is where you want to focus on. But financials. Absolutely, without question, financials are having very strong performance year to date, and it's represented once again today. If you look at JP Morgan, Morgan Stanley, Goldman Sachs, Citi, they're all rallying significantly. I think this is a good environment for financials because they're under-owned, and I think that's so critical. I don't think people pay attention enough to what is positioning in a particular sector, and there's a lot of room to rebuild long positions in financials.
So we're not surprised that almost 2/3 said tech, are we?
No.
At this point? Well, I was wondering whether, the performance this month, where tech is number 6 in terms of performance, was the exception or the new rule. That you think that the broadening is going to continue, tech's going to take a little bit of a back seat for a bit, and these other sectors are going to run. I don't think the broad investing audience necessarily agrees with that.
I think Joe's right. I mean, you're going to get this broadening. We're getting it. I think you're fine to own tech, but there are other stocks that have earnings momentum as well, and other sectors. And financials, to your point, I was going to say is, look, what has happened since last year? Asset prices have all gone up. What are these JP Morgan, Morgan Stanley? How do they make money? Wealth management. Capital markets opening up, slowly, but opening up. So that all drops to the bottom line. Great balance sheets, dividends, and we're about a year away from when we had the blow-ups of the regional banks. And you still have a little hair on that, but I think there's opportunity there.
Yeah, I was just going to say that I don't think I said tech for that answer, but technology is such a big part of the market now. It's hard to bet against it if you think that the market is going higher, because that represents a lot of the S&P.
I mean, you've also noticed, anytime there's been some significant dips in these stocks, it really hasn't taken long for buyers to come in. Because I think broadly people would agree with you. And speaking about AI and technology, Altimeter's Brad Gerstner, he counts NVIDIA, as you know, as one of his top holdings, along with Microsoft and Meta. He is with us exclusively today. And we're going to get to his latest market thoughts in a moment. I know you want to hear from him on that. First, though, as you probably know as well from his appearances here, he's been on quite a mission to make sure the next generation is able to take part in this country's upside, including AI and its transformative technologies. He's mentioned a program called Invest America on the show before, but his big idea has taken a very big leap forward with the naming of a CEO council. Familiar names to many who watch this network on a daily basis. We're going to show them, Brad, on our wall as we welcome you to our program today. It's great to have you back. We're looking at this list, which is an A list of CEOs in this country. How'd you put it together?
Well, thanks for having me, Scott. It's a great day. And you said it. There are too few people participating in the upside of our markets. And unfortunately, they're losing faith in capitalism. But Warren Buffett gave us the answer. Start with a really small snowball and a really long hill. Unfortunately, most people miss the first 18 years of compounding, but we can fix that, right? Fix it with a 401k-like account from birth. And what better way to accelerate those 401k accounts than to get America's best businesses to contribute to those kids' accounts of their employees. And today, America's best CEOs on both sides of the aisle, I mean, think about this. Michael Dell, Lisa Su, Mark Benioff, Bob Pittman, Dara Khosrowshahi have raised their hands and said, we're ready to roll. We're excited about Invest America. We'll contribute to those accounts. And trust me, there are hundreds of CEOs behind them who I've talked to who are excited for common sense, bipartisan solutions to fix this problem. So the government just has a really small role to play here. Put a seed into this account, 3.7 million children born every year. Put a seed of $1,000 in it in the S&P 500. It can't be traded. And then let the magic of our markets work. People can contribute, birthdays, bar mitzvahs. Companies can contribute like these companies have suggested that they would. And if you start with just $1,000, contribute $750 a year, by 30 years old, it's $200,000 in the S&P 500. This is going to drive financial literacy. It's going to have a major impact on our savings rate. The sociological benefits, increased graduation rates, more optimism, better health, and more belief in free market capitalism. So I couldn't be more excited, more appreciative of these CEOs stepping forward, raising their hands. But the council is going to be very large. This is not a board. This is getting the biggest group of Democrats and Republicans and independent CEOs together and saying we can fix this.
You've said that the government's role is reasonably small. Nonetheless, you do need the government, obviously, to participate in this. And I know from speaking with you both on and offline that you've had many conversations with leadership on both sides of the aisle. Can you tell me how those conversations have progressed and where you really think we are? And let's not kid ourselves. We are in an election year, too. I mean, getting two sides to agree in Washington on anything these days is a struggle, to say the least.
Well, I've been incredibly heartened by the reception on both sides of the aisle in both the Senate and the House. I think there's tremendous goodwill around this issue. And so we're making a ton of progress. Nothing to announce today on who the chief authors will be and who the co-sponsors will be. And it is a presidential election year. And the strategy led by Matt Lira in Washington, D.C. is really to build that coalition, to do the research. I'll be announcing some research in May that's brought together leading researchers on the Republican and Democratic side to provide the research underpinnings for this. And then we expect that this will be a piece of legislation that we can get passed in the spring of 2025. You have to do the hard work. At the end of the day, legislators will weigh in. It will be their program. This is about putting forth the framework for a program that we think can get passed in a large and a bipartisan way. You can follow it at Invest America 24 on X, formerly known as Twitter. And you can see the many people on, that we announced that are out there talking positively about this, from leading Democrats to leading Republicans. You can't find a lot of things that you can get bipartisan support on today, but this is one of those things. This can transform America. 3.7 million kids, $1,000 per kid. That's $3.7 billion a year. That's less than 0.1% of our national budget. If we can't do this to get every kid in the game, I don't know what we're doing.
So you said, businesses and families can add to this account, which you obviously expect CEOs to do for the children of their employees. It can't be traded. Can you go into a little more detail on that aspect? When can it be traded? When can the money first be withdrawn? How the mechanics of this are really going to work?
Correct. And let me caveat. At the end of the day, this will be part of a legislative process where people will weigh in with their best ideas, and they're going to have different ideas, and they have great ideas. So what we're hoping to do is put forth a straw man, and then to score those different ideas to give the legislative process a boost in picking and choosing what works best. But really to have this strong framework, 3.7 million private accounts seeded by the government. So, for example, it would be invested in the S&P 500. At the age of 18, maybe you could take up to 20% of it out for a qualified one-time expense. Think college, start a business, buy your first home. And if you add to the account, you could add on a tax-deferred basis, much like a Roth IRA. that could just compound. We know there's something in the behavioral economic literature called the snowball effect. Savers save. There's a misconception in this country that poor people don't save. Not true. The big hurdle is getting a savings or an investment account open. It's a super high hurdle, not only for folks who without means, but for all families. So by getting over the cold start problem, by getting everybody into the game, we're confident, and the research suggests that those savers will save a lot more. Then there's a lot of debate at 18. Are they able to take out 20%, maybe more? Maybe you turn over all responsibility to manage the account at that point in time. I happen to favor an idea where you could take out 10% more at 30, 10% more at 40, and then at 50 you get the entire account. But the most important thing is that we get this in the hands of kids. They open up their phone. They see that they own a small slice of Apple, of Tesla, of United Healthcare, etc., that are all in the S&P 500. That is going to be a game changer when they're learning about financial literacy, compounding, ownership, capitalism, etc. And so we're really excited. This is another major step forward. It's a demonstration of two important things. Number one, companies will contribute to these accounts, and that's a huge accelerant. The 401k accounts in this country is $75 billion a year, right? If we just contribute $3.5 billion a year to these kids' accounts, it will double the amount in those accounts. The second thing is it's very bipartisan. And that I think is a warm welcome, in an environment where things are very polarized. But we have, as I said, leading Republicans and Democrats who are excited about this, and we can reinvigorate the belief in free market capitalism. Less than half of kids, or half of people under the age of 40, according to Pew and Gallup, believe in free market capitalism. We need to change that.
Well, you continue to live ambitiously, Brad, stealing from our obviously most recent marketing campaign, and you keep working it and you keep us up to date. All right?
Will do, Scott.
Right. Let's turn our attention, if we could, now to the stock market, to the S&P 500, among other things. Can you give me an idea as we approach the end of yet another solid month for stocks, a great quarter, obviously, what your current positioning and market view look like?
Well, you and I talked when I was on last time. I said this year was going to be different than last year. Last year, we started the year, everybody was ultra negative. Remember, it was just 18 months ago. NVIDIA was $125 a share, and Meta was $90 a share. It's hard to actually get your head around how recently that occurred. Everybody hated those names. So we were very aggressively positioned at the beginning of 2023. We thought that our return to target in our portfolio was up over 80% for the year. We thought this year would be a more normal year, think 20 to 30% returns. And a lot of those returns have occurred in the first quarter or the first 4 months of the year. But if you look at the multiples, Google trading at 19 times, Meta trading at 22 times, NVIDIA trading at 31 times. These are not bubble territory, but you do have to get your forward forecasts right. So we continue to own, those names in our portfolio and others that I'm happy to dive into.
So, I think some would suggest as they look at, valuations, multiples, and they say, well, just because we're not at historical peaks, that doesn't necessarily mean we're not overvalued. And a lot of these stocks have run a lot, right? I mean, NVIDIA, the multiple certainly has come in as the outlook and the earnings have come higher than many people have in their wildest dreams expected, certainly in the near term. How would you assess that?
So you really have to think about, how we got here, right? NVIDIA, the expectation for NVIDIA's data center revenues at the start of 23 was $20 billion. Instead, they did $100 billion. So their revenue was 4x, what was expected by the street consensus at the start of the year. So of course the stock is going to be up a lot. If you look at it this year, it's currently trading at 31 times 2025 consensus of $30 a share. Now it's going to grow this year at 100%. The street consensus is that next year it grows at 20%. And in 2026, it grows at 10%. We happen to think it's going to grow faster for longer. And the reason for that is we think the global build out, the total TAM that they're addressing is bigger than currently in street estimates. And we think that their share of that is going to be larger. Last week, I was at GTC where they announced the Blackwell generation, and we do our own bottoms-up research. We see what companies are ordering. We see what hyperscalers are ordering. We see what the sovereigns are ordering, and it's large. And we think they extended their lead with the Blackwell generation. Jensen is firing on all cylinders. And so we think it's, really trading below 31 times, but it's trading at 31 times street. So is that bubble territory? I don't think so. We're in the middle or in the early phases of a phase.
All right, traders. Hey, thanks for hanging out with me today. I was a little busy with some stuff that I had to take care of, but for the most part, pretty good day of trading. Wasn't too crazy today. It is hump day. I'm on my way. I'm heading over to Knott's Berry Farm for the rest of the day. It's been a good week. Looks like this bear flag might get invalidated here, so we'll see how that plays out. But nevertheless, guys, we still are gonna stay short on Reddit. Gonna ride this baby all the way down. Hopefully it settles down here and works its way back down. But yeah, it is that time to go. So thanks for hanging out with me today. Please check back tomorrow. I think I'll be back. I think I'll be on tomorrow just because we won't be on Friday. It'll be the last trading day. So come hang out with me tomorrow. Do not forget to subscribe to the show. Again, I am Shimano Trader. This is The Spread. I want to thank you guys very much for hanging with me today. Let me switch my screen here a little bit. There we go. Anyway, yeah, thanks for hanging out with me today, man. I am Shimano Trader. This is The Spread. We are here live Monday, Wednesdays, and Fridays usually. But we are considering changing things around just because we need to get a little bit more followers, a little bit more eyeballs, and I want to keep supporting Tradecaster to have a channel to hang out with, not just 3 times a week. So consider subscribing to the show if you like what you saw here today. It was kind of a slow day. It's a slow week, period. It is Holy Week, but it is a slow week this week. So a lot of slow volume. Looks like SPY might continue to fade here the rest of the day. We're going to hold on to our short. It is really inexpensive contract that we purchased. Maybe we get negated here on the bear flag and continue to work our way down and flush at the end of the day and make some money. But outside of that, traders, good hanging out with you today. Please subscribe to the channel. I am Shimano Trader. Thanks for hanging out with me today, and hopefully I'll be back online tomorrow, and then we can do it all over again. What do you think of that? All right, man, take care of yourself. Don't forget to ask for help. Little prayer here and there, especially on Holy Week. It's not a bad thing. Good luck to you on the rest of the day, the rest of the week, and hopefully we can hang out tomorrow. All right, guys, peace out. Shimano Trader, I'm out.
Hump day, yeah.